What's up, guys? What's up, guys? I see a lot of you are here early. That's good. Good to see that. We're going to be starting in like 45 minutes. So make sure you get your popcorn ready. Make sure you get your pen and pencil ready. Your pen and paper, I mean, because today we will be going over some of the news in the market that happened, the infrastructure bill. We'll be going over what the students are doing in the trading school with Mark Putrino, chief educator at the trading school. We're going to be going over sectors and all that stuff. I see a lot of you are here early. That's good. Good to see that. We're going to be starting in. So yeah, guys, we're going to be doing that. And any other questions? Yeah, I mean, it's going to be in a while. I just wanted to come in here to let you guys know. A lot of you guys are in here pretty early. Good afternoon, guys. How you doing? Yes, we are going to be starting like about 1 p.m. Just wanted to come say hello, guys. So yeah, tune in. We're going to be here in like 40 minutes or so with Mark Putrino going over everything, markets, a little bit about the trading school as well. A lot of students here from what I can see. Good stuff, guys. Good stuff, guys. What's up, fellas? How we doing today on a beautiful Sunday here, live with you here from Benzinga? We're going to basically show you how to start trading to earn an income, right? And right while you're doing that, you can also learn from Mark Putrino, former hedge fund manager. We're going to be starting soon here in about 25 minutes. Mark is getting in the house. In the meantime, we're getting everything ready for today, and it's going to be a good session. It's going to be a good session. We have a lot of things to cover. We're going to go over the news today about the infrastructure bill, like I said, over sectors, what we're doing in the trading school as a community, what we're trading in, what are we looking forward to there. We're going to do a market overview, everything, the whole 9 yards. You just have to sit back and relax, and that's it. So stay with us here. We're going to be starting in about 20 something minutes for the session. Hey, for you guys that are in the Zoom chat, make sure that your settings for chat are for everyone so that we can all see and have a more fruitful conversation, and we can all see each other's questions and all that stuff. So this is for the Zoom chat, and the attendees today will get a recording of the session. So if anybody is asking, make sure to let them know, just so that we can continue and proceed here with the workshop today. So, hey, what's up? What's up, Aizia? We're going to be starting soon here, guys. Just make sure you got everything ready, popcorn, pen and paper, settings on Zoom chat. Make sure you adjust your audio, okay, so that you can enjoy today's session, guys. So we'll be starting here in about 15, 17 minutes or so. All right, ladies and gents, are we ready to start? Let me know in the chat if we are ready to start on the Zoom chat. Okay. Are we ready to start Zoom folks? I need to see enough yeses there. Okay. Enough talk with the sheebs and the flokes or whatever that is. Okay. All right. Everybody's ready to start. Awesome. Awesome. Great stuff. I love it. It's a great day. We got some good energy here in the house. Let's take care of this. And number one, guys, first thing I want to see here is let us know where you're from. Where are you tuning in from in the chat? Let's go. I need to see some places there. Let's see: Canada, Bulgaria, Florida, Cali, Oregon, Pakistan, Turkey. We had a couple people from Nigeria. We keep growing the Nigerian crowd, which is awesome. Costa Rica, New York, Massachusetts, North Carolina, Arizona. Come on, guys, keep them coming. Let's see those places. Come on. Brazil, okay. Hong Kong, I love it. Philly, Virginia, Tunisia, India, Sri Lanka, South Africa. This is beautiful. Shanghai, United Arab Emirates, Malaysia, Jamaica, New York. Okay, so we got people all around here. So now the second thing is I want to ask you guys what do you think is moving the markets right now? What is your biggest concern in the market? Do you still think it's inflation, or do you think it's more supply chains, or do you think it's related to earnings, or what do you think is moving the markets now? Let me know. What do you think is the biggest issue affecting the markets? Okay, sentiment, earnings, supply chain, retail. Employment. Okay, earnings, hyperinflation, earnings sensitivity, government policy, volatility. Okay, Fed. I like it. There's a lot of interesting ideas here. Chip shortage as well. So we're going to go over some setups today. We're going to go over what we're doing here in the trading school. We're going to go over sectors that we're looking at, trade ideas, education nuggets that we're going to be dropping today as well. And yes, correct. So I believe we have Mr. Mark Putrino in the house. Let me just go ahead and check in here. Is Mark in the house?
Hey, I am.
Hey, Mark, how are you doing, sir?
I'm doing good. How are you?
Good. Are you ready to start today? How are you feeling today?
I'm feeling pretty good, man.
How was your weekend?
Yeah, it was pretty cool. My daughter is a cheerleader on our high school football team, so we watched the game yesterday. They got crushed, but at least the cheerleaders did a good job. But yeah, it's going pretty well. But I'm glad to be here to talk about the class.
Yeah, absolutely. We got a lot of people here excited as well. Do you mind sharing your screen here just so we can get this thing going in the meantime? And yes, make sure you guys have your audio settings correct on Zoom. We are going to be going over the presentation today here that we mentioned prior with Mark. 1 second, guys. Okay, you got the screen now, right, Mark?
Yeah.
Okay, guys. So, well, for starters, Mark, you mind giving a brief introduction here of your role here as a chief educator in the trading school and what we will be going over today with the folks here?
Wait, hold on 1 second. I just want to make sure I see me. I don't see the screen.
Okay, I see the screen and I see you as well.
You see the chart. Okay, cool.
Yeah.
Well, I don't know. What do you want to talk about? I heard you asking the class, what do we think is driving the markets?
Right. So let's first do like a short introduction for everybody here that doesn't know your background, where you've worked in Wall Street, so they know more or less, who they're talking to pretty much.
Yeah, I guess that's a good place to get started. I'm just excited. Well, my name is Mark Putrino, and I am a market technician and the head of education at the new Benzinga Trading School. I have a pretty long, about 25-year background in the institutional trading world. meaning trading for big financial institutions, not retail trading. My first trading position was with Mario Gabelli, who's a very well-known money manager. And I think now he manages, I don't know, probably $50 billion. You can see him on CNBC a lot, or some of the other stations. Really a brilliant guy. So I had my first trading gig there. I was actually a market maker. And then at the time, a lot of traders were moving over to what we call the buy side, or the hedge fund world, because the compensation was just better. So I ended up going over to SAC and worked directly for Stevie Cohen, who is one of the greatest money managers pretty much in the history of money management. He is the person that allegedly the show Billions is based on. I've never seen Billions, but you'd be surprised how many times I get asked when I meet someone and they find out I work there. It's like, oh, is Billions for real? So after a short stint there, I went and I was the head trader at three different places for about 5 years each. And, there was just a couple of things. Like my first one, I was in the city, and then the partners had a East Coast, West Coast battle, and the West Coast partners won. So they shut the New York office. So then I moved over to the startup hedge fund in Greenwich. And then about 5 years after that, I went to another fund. So I decided to leave the money management world probably about 4 or 5 years ago, because it's really, it changed a lot since I started. When I started, it was a fun job. There's a lot of camaraderie, a lot of, going out to dinners and games and so forth. But the computers pretty much took it over. A lot of people lost their jobs because of computers. Like when I first started back around in the late 90s, Goldman Sachs had 600 what they call cash equity traders. As far as I know, now they have 2. And the only reason why they have 2 is because they legally have to take a vacation every year. So that's a law that's passed in investment banks. So if someone's doing something crooked, like there's time for it to come out, they can't hide it. Okay. So anyway, my point is the industry really changed. One person can do the job that 600 people did 20 years ago. So I decided I kind of wanted to get into education, because I take it, I don't know if personally is the right word, but it kind of really bothers me when I see these, these like people like, oh, I'm going to teach you how to, I took $10,000 and turned it into $5 million in 13 weeks, or, I can teach you my method. And a lot of this stuff, as I'm sure a lot of the people listening probably realize, is garbage. And that's probably one of the reasons why they're here. So this isn't like a one-hit wonder course, like learn how to play the guitar in 2 hours. In the class, we focus on the real basics, and I can walk you through some of the trade ideas that we've recently have made money on. And I can even show you some of the stuff.
Okay. Yeah. For sure. We'll go over a lot of things here. So that's good to hear. So that basically you've been trading with Steve Cohen and Mario Gabelli, legendary investors, well known on Wall Street, and you have a passion for education, and the trading school really seems to fit in there, with everything. So that's pretty interesting.
Yeah. And one of the things about the trading school is that, like, I'm not teaching the students like my method or whatever, like I have some secret method. I'm teaching them how to, or at least my goal is to teach them how to develop their own styles, what fits their personality, by, using various indicators. And I'm teaching them how to use the tools. And, some people are day traders and they apply the stuff that we're talking about to the day trading. Some people are long-term investors. Right. So it isn't a one, it isn't a like,
one size fits all.
I'm going to show you how to be a genius trader type class.
Okay. All right. So, well, let's just kick it here with a quick question here, Mark. What is your take? Because recently, I think it was yesterday or today, the infrastructure bill was passed. So a lot of people are obviously trying to trade that news. Would you say that there's a way to trade that, or any way that you might already be in that trade with the trading school members right now, with that particular news that just broke during the weekend?
Well, I don't know. Well, we'll have to see on Monday, obviously, and we have talked about it, but in a lot of ways, I think it almost is a wash, right? Because they had this huge bill that they were talking about, and then there was also going to be these, really big tax increases. So now it's a smaller bill, but the tax increases will be less. So it's almost like it's been kind of a wash. And I think that could be one of the reasons for the recent, um, the recent strength in the market is because what's the big problem that everyone's talking about now is inflation. Well, this bill, $3 trillion or whatever it was extremely inflationary, right? Assuming they passed it. The fact that it got pared back, or that takes some of the inflation out of the equation for some investors. So that could be one of the reasons why the market was strong. But who knows? Maybe a lot of people thought it would just be dead on arrival, but now they know it's still going to be a billion. So that's in the short term. In the long term, obviously, the country needs infrastructure. A lot of these roads are falling apart and everything. So I think it's still kind of too early to tell, but it's all kind of focused around inflation, in my opinion.
Mm-hmm. Right. So we're definitely and I mean, energy would be, somewhat in a beneficiary there in that news. Do you think? You think
Yeah,
energy?
yeah, sure. I mean, oil, something that we watch a lot, and it's been taking a break, but this is the oil chart that I'm just bringing up here. This is the price per barrel of oil, and we could talk about how we talked about this trade back in August, but just to show you oil now. So, we've had this sell off, but now it's getting back in gear. And when something makes a move this big, it's not uncommon to see some kind of profit taking or consolidation. And I think
Mhm.
that's just what we saw here. I think oil will probably get back into gear, but we at the class here, we don't guess. We just watch and we let the market tell us what to do. I don't want to say, well, I think oil is going to 100,
Mhm.
because if tomorrow we come into the office and we see, oh, well, oil is trading down again, like we don't get married to an idea, so to speak. We want to remain flexible. And if oil does get down to around here, there's probably a good chance it bounces, because this level was important resistance back here.
Mhm.
In the markets, levels that were resistance can convert into support.
Right.
Matter of fact, I'm going to just bring up Bitcoin, because I was just looking at this before, and I think the chart tells it, just the chart of Bitcoin can just give the people listening now some of the
So this is a possible setup or a
well,
possible trade.
this is just a brief educational explanation, and then we can look at it as a potential trade. But to me, it looks like it's pretty neutral. But I just wanted to point out that one of the things that I teach in the class is that certain levels in the market are more important than others. This is one of the main things that traders need to know. Some price levels are really important. Some price levels aren't. Sometimes we know why. Sometimes we don't. Most of the time we don't. But let's look at this price level here. Now, this is Bitcoin. I'll get rid of that. So this is Bitcoin going back to April. So look what happened when Bitcoin got up to here, around 40,800. It hit resistance. So it went down, rallied back. What happened when it dropped back to this level again? Well, this time it was support. So we see here an example of a level that is important. We can also see what is a common and important dynamic in the market, that resistance can convert into support. How does this happen? The traditional reason is remorseful sellers, right? People sold Bitcoin here. They thought they did a great job when it went lower. But then when it goes higher, they regret their decision and they say, you know what, I made a mistake. I want to buy it back. But I'm only going to do so if I can buy it for the same price I sold it at. So they place their buy orders at the same level they sold at. If there are enough of these orders, it creates a support level like we see here. So that's a principle of, one, an important level, but two, resistance becoming support. Now we have the opposite example up here around 48, call it 48,600. We have support becomes resistance. Again, we have an important level. So how does support become resistance? Well, it's the opposite. It's not seller's remorse, it's buyer's remorse. People that bought here thought they did a great job when it rallied, but after it fell back through the level, some of them say, yeah, darn, I made a mistake. I want to sell it, but I don't want to lose money. So if it gets back to the same level that I bought it at, I'm going to sell it. As a result, there's a lot of sell orders placed at the level that was support. That forms resistance. Now, of course, it's broken through that and gone up higher, but It just is
Mhm.
a good illustration of how support can turn into resistance, resistance can turn into support. And there are certain levels that are more important than others. For example, where did the Bitcoin most recent rally stall out? Same level that it did back in April.
And this is something that you went over. I don't know if you mentioned it, being a CMT for as a charter market technician.
Yeah, I've been one for about 20 years. Um, it's when I took the CMT, I think you had to do it in 3 years. I think now it's a year and a half, but there's three parts to the test, and it's kind of based on the CFA. So it's a pretty cool thing. If people are really into charting, I would suggest you look into it.
Okay. Christopher's asking a quick question here. How many touches do you use to indicate support or resistance? Meaning with that line.
I don't think there really is a right example or a right answer. I mean, you have to remember chart reading is ultimately subjective. It's what we see, I mean, here it was just, one or two. Some here it was just, a spike. Sometimes we see support or resistance that lasts a long time. So it's really more about understanding what support and resistance is, as opposed to just saying, well, if it touches it 3 times, it's support, or if it touches it 5 times, it's
Right.
support. And I know it says that in some of the textbooks, but
Right.
we just have to understand what this is. There's so many buyers at this level that all of these supply or selling gets absorbed, right? So here, sellers need to pay low, or sellers need to sell lower prices. They'd like to sell here, but they have to push it lower because there's no buyers around, or there's not a lot of buyers around.
Mhm.
When it gets down to the support level, there's enough demand for it or buyers that they absorb all of the supply. The sellers can sell as much as they want to, and it stops going down. They don't need to pay lower or offer at lower prices. So we see that we have a support level here. I mean, I would think one thing to say is that the longer something's at a support level or resistance level, probably the more important that it is. But it's just, it's not an exact science. It's just something that comes with feel, right? Or a little bit of experience.
Right. Right. And just to give you everybody here a quick update here, the futures are all up, and it looks like the biggest gainer is going to be the Dow, obviously on that infrastructure bill. So, all right, good take there on Bitcoin, Mark. Now, well, what are you guys looking at in right now in the trading school? I know you had class on Friday. What's the class on Monday going to be over, and what are you guys looking at in the actual trading school as far as possible setups? What's going on there with you guys in the school?
Well, we've had I mean, we've pretty much every trade we've talked about since the class started, I think, has worked out. So this week we closed out our Carnival Corp. All right, so we bought Carnival Corp, our Carnival Cruise Lines, I'm used to calling it. But so anyway, and this is a way we do this in class. I'm not just up there showing ideas. A lot of the students will say, hey, is this a downtrend line, or is this support, or is this oversold or overbought? So one of the students brought this to the class's attention and said, it looks like Carnival has a really clear downtrend break. And when the stock is in a downtrend, the bears are in charge. But what happens when it stops going down? You have the price stays the same, and therefore it moves sideways on the chart. Then you cross that line. That shows the bulls might be about to take over. So this downtrend line is a graphical illustration of the supply and demand dynamics. And when it gets broken or crossed, we get a signal, or well, it's a sign that the bulls might be taking over. So that was the one thing that we looked at. Another thing we looked at is this particular oscillator, which we see on the bottom half of the chart. It's called a Fischer transform oscillator. And as you can see, it's given very good buy and sell signals on the chart. So students that are more mathematical like to have things like this because there's no subjectivity in it. This line is derived from a mathematical equation, which I'm not sure what it is. But anyway, you can see we've had good buy and sell signals. So we got the buy signal here, which turned out to be pretty much right at the bottom. And at the same time, that we got it here. So this was a buy, and we were going to pretty much take it up till where we got a reversal, or something told us to reverse it. But then we got this news out on Friday, which was good. So it rallied, and the students, whoever bought it, sold it. And a lot of the students play options.
Yeah, yeah. Some of them actually. So this is one of the trades you guys took last week, pretty much.
Yeah, I think we got into it on the prior Friday, and then when we sold it. Yeah, all right. So yeah, so this would have been Friday here. So last Friday, then Monday, Tuesday, Wednesday, Thursday, and then we sold it on Friday. So this one happened to work out really good for us. It was a nice move in 5 days, especially if you're an option trader. Some people, probably doubled or tripled their money or even more.
Right. So basically what we're doing here in the trading school is that we're showing people how to find these opportunities, right? So how someone is asking how to find well, I mean, you're trading for income, of course, right? You're not trading to lose money. We're trading here to be profitable. So that's what we're doing in the trading school. We're finding these opportunities. We're finding these trade ideas that are vetted by Mark, his 20 something years of experience, not just in Wall Street with, Jabelli and Cohen, legendary titans, but also with the CMT experience, being able to read charts properly and the actual flow, the equilibrium behind the charts, which ultimately it doesn't matter what you're trading, options, crypto, just stock. If you can't read a chart, you're going to lose money, period. So Richard's asking, yeah, Richard, I'm going to drop the link there for the trading school. But we're going to keep on here with the education. We might go over a little bit in a little bit more. No, the CMT is not. That's not some. The CMT is a professional license. So yeah, let's go ahead, Mark. Let's continue here with the education. Great trade here, by the way, for the members that banked on that.
Yeah, we also just closed out a pretty well. Actually, let's just go back to this. So this is common sense here. We see a downtrend line break, and we have that indicator crossover here. So this isn't a super secret method or something like that. I mean, these are just common sense things that we find on pretty much any trading software that's out there. It's in BZ Pro and in the charts in there. So common sense and logic. The same thing let us make a nice profit on Twilio. All right. So one of the students brought this to my attention, or the class's attention. That's one of the things I really like about this, is that the class gets really involved. Some of the students are like forming study groups together and so forth. Because I'm not just there lecturing. Like I don't want to just tell people what to do. I want them to learn to do it for themselves. And the way they do that is I'll say, well, instead of me saying, well, here's a downtrend that's about to break, I'll ask the students, well, let's see some downtrends that are about to break. And they'll upload their charts. And that's where we got these ideas. And I believe that's where we got this one. Let me just make this chart pane below, because this volume here is important. A lot of times I don't really pay attention to volume unless we get something that's really big like we got here. So here is why we were able to make a quick logical profit on this. Again, we're not doing anything super secret or really ultra complicated. We had some kind of news where this thing got sold off, right? And in doing so, it got to a level that was support in the past. Right, we can see that back in May, when it fell to around 283, it found support. Well, sometimes levels that are support can stay intact for a long time. So after this big drop, that's where it found support again. At the same time, we had a massive amount of volume here. This is volume, over 22 million shares traded, and it averages like 1 or 2 million shares on an average day. So that tells us that the people that sold are throwing in the towel. We call this a capitulation. Basically, what happens is, say you're some hedge fund trader and you have 100,000 shares to sell. Well, you want to get a better price. You sell 10,000, you wait for it to come back, but it keeps going lower. You sell some more. maybe you sold 30,000, then finally you say, you know what, I can't take this anymore. You just tell your broker, just go get rid of it, just go sell it all. So as a result of that, you get these big volume spikes. But
This is
what
the famous
happens?
Twilio trade.
Yeah, so this is part of the Twilio. We had three things that told us to get into it. It had found support.
Mm-hmm.
We had capitulation volume, and it was really oversold. And you can see this on the RSI indicator down here.
Right.
So capitulation means all the sellers are basically throwing in their towel. So when buyers re-enter the market, there's no stock around current price levels. They have to bid higher prices. Someone might come into the market and say, all right, well, I'll pay $290 for your shares. And there might not be any sellers that are willing to sell at that low. They might be sellers that say, 303. So they have to pay higher prices. That is by definition what a stock market rally is. Buyers paying higher prices because there's not enough shares at the current level for them to buy. So we had the capitulation volume. We had a former support level reached. We were oversold. So that's why we got in. We got in right here on the 29th, I believe. So This week it hit our sell target. Remember how we talked about how levels that were support can become resistance?
So this was an entry so you put an entry and exit there for the members for that trade. Okay, that's nice.
Nice. We we all do this together. Some people buy the stock, some people don't buy it, some people buy the calls. I'm not personally buying it because I don't want to have a conflict of interest with the students. But the students will tell us, I bought these options, I bought these calls. So why did we pick this level as our price target around 313? Because it was support. Remember what we talked about? Buyer's remorse. Mm-hmm. People bought it here, thought they made a good decision when it rallied, but after it fell through their level, a lot of these buyers become remorseful and they say, I made a mistake, I want to get out of this. So they try to sell the stock at the same price they bought it at so they can get out without a loss. So we had three conditions for entry. We had this found support at a previous support level. We had capitulation volume, and we had oversold conditions. The stock got up to our price target, which was here, which we said we're going to have our price target here because it's a former support level. And this one worked out for us too. So this is another trade that we were in just about a week.
Right. Yeah, I do remember that because I actually go in the morning before we start here, before we open shop. The classes are pretty early at 7 a.m. So I'll always get in there. There's always people talking about trade ideas and I always check in and tune in. But we're getting some questions here about the trading school. So I'm just going to go over this really quick, Mark. Let me just take the screen here.
Sure.
Paul, yes, Pro does come with the trading school. So if you get the trading school, you get Benzinga Pro. So let me know if you guys can see this. Can you see that, Mark, there on my screen? Mark's out. Let me know, guys, in the chat if you can see this. This is my Pro, right? Benzinga Pro, which is included in the trading school. And this is the actual trading school. So this is the homepage. Whenever you click the homepage, you have all the prior classes. It just gives you like an overview there of what's going on. You click on live class, it takes it to the actual live class. So as you can see here, you have the chart, you have all of that. Basically, this is the live stream video. Below is the chart. Here we'll have a chat. The chat will be open when we have the class, the actual class live. This is the video library. This is where you're going to find all of the recordings, all the prior recordings when it comes to finding the classes, the prior classes. You'll see the titles here. These are the Q&A. So we have Q&A sessions in the class. These are the office hours. We have office hours included as well for you guys. And then this is where the action happens in the chat rooms. We have a trading chat room here. This is the only place where you're posting trade ideas. As you can see, everybody's sharing ideas, education together. So this is where you're going to post trades, not in the live class. The live class is only for education related questions to the actual session. These are office hours here if you have any questions. The files there where you can see here, you can go over Mark's trade ideas and anyone in particular here, Mark. Okay, I do like this one. What's going on with this one, Mark? With the healthcare?
The healthcare fund, XLV.
Mm-hmm.
We follow all the sectors. That's one of the things we do to look for trading ideas. And okay.
Okay. Clear break. Clear break right here from the downtrend. So I mean, you can see all of these trade ideas that you're getting here from Mark, and this is a chat room that only Mark can post. So
Yeah,
there's
go up a
no,
little bit and you could see
yeah, you're not going to see any noise in this chat room. You're only going to see Mark's trades.
if
What
you
was
keep
that,
going
Mark?
up, I think you'll see a new trade we just talked about getting into,
Which
that
one?
one there. And then we could talk about Stanley Works is one that's out there.
Which one, Mark?
Well, yeah, so there's the Carnival cruise we just talked about. That's when we told people to get in. The one with the green lines there, the greenish one.
Okay.
Yeah,
Right.
so we are, yeah, so that's the chart I just showed, but
Okay.
that's when it was our buy signal.
Okay. So a lot of you guys might say, wow, anybody can just, do that and then say, look, here's the winner. But you're looking at here when Mark was charting this before this huge gap up to like 26. Okay. This is an insane killer win on calls, guys. If you're doing that or in the stock. So this is where the alert came out where Mark put the idea, and the rest is history, right? So this is where you're going to get some, Mark's trade ideas. And you're also going to get Benzinga Pro with the trading school. As you can see, you have your charts here. You have the only scanner open pre-market and aftermarket. You have a lot of things here in Benzinga Pro, which is included. And we do have some sessions to help people, lessons to help you with Pro. So all that is included for members. But now that we got now that we just went over that, so the questions can ease out, let's head back here with Mark Putrino. Let's get back here to the education folks. Whenever you're ready, Mark.
All right. All right. So this was one of the things that we talked about. You see this XLV Spider Fund?
Yep.
Okay. So we saw this uptrend break, and here we also caught this back here too, because when you see, here's the thing, we're not guessing, we're letting the market tell us what to do, right? You're never going to outthink the market. So this was in a downtrend, and I know a bunch of the students bought XLV down here, and we thought, well, there's a good chance it's going to find support around the 125 level. Why? Because 125 was resistance. The people that sold here excuse me, sorry, the people that sold here regretted doing so after it went higher, and they say they want to buy it back, but they don't want to pay a higher price, so they placed their buy orders here. So we had a feeling there would be support there. We didn't want to guess, though. We waited for this downtrend line here to break or get crossed as a way to know to get into the trade, because when something gets to support, it could keep going. So a bunch of the students wrote it up, and now this uptrend line has broken. So we have the opposite of what's going on here. So this could be the beginning of a new downtrend. And this is one of the things I was talking about, how I'm becoming in the market. I think we're overdue for a correction. I don't know, nothing major, but here's two reasons why. One is the two biggest sectors in the market are technology and healthcare. So we can see here, healthcare has broken its uptrend, right? And the market is the sum of its parts. The S&P 500 is 11 sectors, and this is one of them, healthcare. The biggest sector is technology. We're going to look at XLK. That is the spider fund that follows technology. This tracks the technology sector, and it's extremely what we call overbought. Overbought means it is trading at an extreme above what would be its typical or usual trading range. I mean, look at how this has gone up so fast. So this sector is overbought. That's going to draw sellers into the market, and they could knock the price down a little bit. So you have the healthcare sector just broke its uptrends, and the technology sector is overbought. That tells us that SPY could be about to reverse. Now, if this does happen, where would we look for support? Probably right around this 453 level, because it was resistance. So your resistance becomes support. Like resistance became support. So now resistance could become support. Markets don't go straight up. They do go down too. I know it's hard to hard to think that because it's been in this big rally for the last month. So this is one of the things that we talk about in the class. We go through all the sectors to look for ideas. So we see technology is overbought. The consumer discretionary sector was also, oh yeah, I mean, look at this. Things just don't, moves like that just really aren't sustainable. There's got to be some kind of give back at some point, but we don't guess. Say you're thinking about shorting this or buying puts on it. Well, here's one thing you could do, right? You could just draw on your uptrend line. And if it keeps going higher, fine. But once this uptrend line breaks, it'll be a graphical indication that the price is not moving higher anymore. And that could be time to get a trade on the short side. If you buy puts or know people that short it, which would short the stock. But yeah, so those are some of the things we talk about in the class. We go through the different sectors. So it isn't just like a teaching class about trading. We're also talking about things that go on real time in the market. Like we spent a lot of time talking about when the Fedex earnings came out. And actually FedEx is one of our open trades, so we'll take a look at that.
Oh yeah, I remember FedEx pretty well. I know.
Yeah, so this is where the earnings came out, because FedEx is like a bellwether to the economy.
Just to clarify, we're showing you guys actual trades that we took in the trading school. Okay, these are trades that we've been following up on. In case this is your first time checking in.
Yeah, this trade is open right now, and it was a buy. All right, so let me just get rid of all this noise here.
Something tells me that FedEx might pop with the infrastructure bill tomorrow.
Well, a lot of the things we do is, I know this is kind of contradictory to what I just said, but we focus more on the charts than the news, because I think that in the news, there's just a lot of noise. But if I see something I think is important, we talk about it. Like we went through when Tilray reported, because I was talking about how Tilray has so much goodwill, so much of their valuation is goodwill, it could be bad for the company. So Tilray is here, and I think they reported maybe here, and it's gone down since then. But some of the students are interested in fundamentals. So I said it's a bad thing to have too much goodwill at a company. And goodwill is like an intangible value as opposed to like a factory or something. So what happens is these cannabis companies went on these buying sprees, and they bought all these companies, smaller companies, and they racked up all this goodwill. Goodwill is basically someone's opinion, right? Say there's a neighborhood where every house is $500,000, but the house you grew up in is there, and because you grew up there, you have sentimental value, and you want to go buy it. And the person that owns it says, "All right, well, I'll sell it to you for $600,000," and you say, "Okay." So that $100,000 is now goodwill of the value. If you said my house is worth $600,000, $500,000 for the structure and the land, and then the $100,000 is goodwill. It's an intangible. So goodwill is basically the opinion of a bunch of people sitting around a table deciding what it is. And if they overbuy or overpay for companies, that ends up going on to goodwill. So I forget the exact number, but Tilray had like half of the value of the company was goodwill. So anyway, we talked about that. We talk a lot about the supply chain thing. Like now, this is a report that people have probably heard about. It's the ISM report on business. They release their numbers once a month. You might hear like the PMI.
Yeah. And this is just one of the many things that you're looking at that you go over with the students that basically helps them. So what you're saying here is that you're going over the economic numbers the reports that are coming out, just like you used to do, when you were trading at the institutions. You're
Yeah,
basically
exactly. Like
showing them,
this is the type of stuff that like the traders look at institutions, right?
and you're sharing this with them. That's very nice of Mark to really sharing with you guys like the actual, source of what we're looking at.
Well, this is just something that's interested in the context of the supply chain issues and inflation. And is inflation transitory? Is it not transitory? Blah 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 blah. So this report comes out once a month, and anyone can look at it. It's free. It's ismworld.org, and this organization, their members are all people in various parts of the manufacturing industry. So this is the number they report on TV. PMI came in at 60.8. Analysts were looking for, whatever, 61 or 60. But if you go through this, it's pretty interesting. What are respondents saying? So this is the October number. So this is what people were saying like 3 weeks ago or a month ago. Global supply chain issues. Getting anything from China is near impossible. Extreme delays. Microchip and circuit breaker shortages continue and are expected to continue. My prediction that 2022 will be very similar to 2021. Demand for our product remains strong, but we continue to struggle to secure enough raw material. So when you start reading this and they tell you, well, I mean, it's already November, right? And they tell you, well, the supply chain is going to work itself out in January. Just by reading this stuff, people in the industry, does it really sound like it's going to happen in a month or two? Then you go down here and they talk about the various commodities they follow. So look at all the commodities that are up in price. Aluminum, phosphates, semiconductors, steel, all of these things are up in price from the month before. Look what's down in price. Just one thing, wood. So I don't know, what's there, 100 commodities here? 99 of them are up. And one is down. Commodities in short supply. Corrugated packing, electrical components, steel. So you don't need to be an economist, but if you just look at this tells you, man, things are still pretty messed up out there. And this tells me that this whole supply chain thing still has a way to go before it plays out. So, anytime we see something that's really interesting or educational, we talk about it. And, this was one of them. I mean, the main focus of the class is technical analysis, or what they call technical analysis, and trading ideas. But, if I'm going to talk to the class for 2 hours every morning, we could cover a lot of different things.
Yep, absolutely. And I just went ahead and ran a quick poll here, Zinger survey. Would you like to trade and learn with Mark Putrino? 97% answers are yes. So guys, Mark Putrino, I'm pretty sure he already knows this, but he's been around the block. He's been trading with the biggest traders, investors. So feel free to join us in the trading school if you guys want to trade with us. We do this every single day. This is a sneak peek. Like I said at the beginning, a sneak peek, because it's just a fraction of what we go over. The ISM, that's only one of the reports that we are looking at, because right now it's one of the reports that we think has the most value in the market conditions. But 1 month, 2 months from today, we might be looking at something different. We might be looking at another type of report. And that's what it's about. Mark is sharing basically his entire experience, the sources that he's using. This is high level stuff, guys. You're starting to learn to think like the big fish, right? They move the markets, and you want to be on the right side of the trade. So I'll drop the link there for you guys, for all you guys asking about it.
Yeah. So basically, I'll talk a little bit about the structure of the classes. That there are 8 classes, and then when we get to the 8th, we start again at number 1. So it's not like you just take 8 classes and then it's like sayonara and you go off on your own.
Yeah, it's just the schedule that you have to follow per week to go through the course, basically.
Yeah, and each class focuses on something that's really important. Mm-hmm. Like the second class is levels. So I was just talking about levels, and we're back to this Bitcoin here. We talked about levels. So that first lesson is how to figure out what levels are important, understanding why a level that was resistance can become support, or a level that was support can become resistance. So we focus on that during the class. But then instead of looking at textbooks, which have pictures that are always perfect because they're 2020 hindsight, we look into the actual market and we try to find real levels. Like, for example, a lot of the students are crypto traders. And
yeah, we had some people here talking about that for sure.
Yeah. So, when this thing is rallying, people say, well, gee, where is there a chance where this thing is going to find resistance? And, or where's there, at what level where will there be enough Bitcoin for sale that all the buyers can buy all they need to? They don't need to take the prices up anymore. Well, what do? Well, we look into the past. We look to around here, which is, 63,600, call it. Well, guess what? I mean, it looked like it was going to get above it, but it was only for one day. So, like, here's an example of how an important level is playing into the real time in the real market that the students are looking at. Because I've read pretty much every technical analysis book you can think of. And, they're all right because they're all 2020 hindsight. This is like real-time stuff.
Yeah, every class, just for you guys to know, everything that Mark is showing you here, these are things we did live in the class with the students. And obviously we're following up here. There's a couple of questions here I just want to ram through. Sabuj, when do the classes happen? So Monday to Friday, you have your meeting. The actual lessons are Monday to Thursday, and Friday you have a recap of the week. So can people who work full-time fit in the schedule? Absolutely. We have people that have full-time jobs. And I mean, you see the chat, there's people from all over the world, they just make it fit into their schedule because it's, it is something that you have to look into, right? Obviously the trading education, who are you going to get this from, right? Don't get it from some social media account. Don't go to Wall Street Bets. Don't go to Reddit. If you're trying to find education, you need to find the right educator. That's where Mark Putrino with his experience comes in. So obviously, we have people that live in Europe or Malaysia or all over the world. They make it fit on their schedule. The cool thing is that the classes are recorded so that we do upload them in case you miss them because XYZ reason. It doesn't matter. But we have all the recordings there in the actual portal. I think I went over that. Angela is asking, we get a free laptop. Yes. So just to clarify, guys, the trading school is 70% off today until midnight. It includes Benzinga Pro. It includes a free complimentary laptop. It includes all of the sessions, Monday to Friday, office hours. It includes all of the chat rooms that I showed you, the trading chat rooms, education chat rooms, Mark Trading Idea chat room. All of that is included. And everything else that we're going over as well. The replays, you get all of that. You need one-on-ones, group sessions, trade ideas, learn how to find trade ideas so that you can become a successful trader. So all of it is included, but just for today. Valencia, yes, we're going to be sending you guys the free laptop, correct? How does the class schedule work? Yeah, so I think I went over that, Valencia. It's Monday to Friday, 7 a.m. to 7:45 is the lecture, 7:45 to 9. You have the recap of the lecture. And this is obviously mixed up with Q&As and open market discussions. And then you have a break. Then you meet again at 12 at noon Eastern. Everything is Eastern. And that's where you have a full open market discussion. If you have questions about the lesson, you feel free as well to talk about them there. And if you do need office hours, if you do need additional time to go over the material or maybe just clarify a point or two, Mark does have office hours for that. All right. So my question is the stocks, okay. And this is for the year, okay, Arun, this is for the full year. We cover Bitcoin, we cover Ethereum, we cover stocks. There's a lot of option traders there because they know fundamentally that they need to understand the markets and the charts. Like, just like you're able to read a book, you should be able to read a chart and understand it properly. What time? Okay, so I went over the class. Jamie, yes, there is a laptop. Davey just went over the hours, the classes, the durations. I'm dropping the link here in the chat, guys. I want us to focus on the education, but I don't want you guys to feel ignored when you're asking questions about the chat room. So it's just a dilemma for me here, always. But I think we're good now. I dropped the link on all these the YouTube and the Zoom. So let's get back at it with the Fedex trade, Mark.
All right, cool. So this is a trade that some of the students are long now, and I will explain to you why we got into it. So FedEx had this big move lower after its earnings, right? This is what we call a gap down. And as you can see, it opened this day like at the same price it fell to here. So it found some support, but it was only for a day. But anyway, so support becomes resistance, right? So this was support. Now we fast forward. This is January of 21, so almost a year ago. And we fast forward to here. And on this day, it looked like FedEx was going to break this resistance. Well, it did. So this is where I suggested that the students buy. So every position we get into, we have what we call a stop out. In other words, if it looks like it's going to go against us, we want to sell and take a small loss as opposed to hoping that it goes higher. Remember, hope is not a plan. Most traders get wiped out because they don't have plans. They guess. They see something in a chat room, or they literally just guess. They have no idea what they're doing. They just buy something and hope it goes their way. So we don't guess, because when you guess or you don't have a plan, your emotions get involved, and emotions make you do dumb things, not just in trading, but in other areas of life as well. So anyway, so we said, well, we would get stopped out if it closed below 235. So it traded below 235, but it didn't spend much time there, and the stock never closed below 235. So we were still in the trade, and the past few days it's been going higher. Our buy was around 237, 238. Now our sell target is up here around 250, because this level was support right before this sell-off came. So just think there's going to be a lot of people that bought the stock there that wish they didn't, that are going to try to sell to get out, but they don't want to take a loss. So they offer their shares at the same level that they bought them. So there's probably a good chance that if FedEx gets up here, there's going to be a lot of resistance, and this little rally could stop. We also looked at this as a gap. All right, when something in the market moves really quickly through prices, or doesn't even trade at them at all, it shows up on the chart as a gap. And there's an old saying on Wall Street, gaps tend to refill. And that's what we're seeing here. See, we gap down, and now the gap looks like it's refilling. Now, why would a gap refill? There's a logical explanation. Remember what I just said, when people buy and they become remorseful buyers, they try to sell at the same level they bought at. So this is why levels that were support can become resistance. When a stock gaps down or makes a really rapid move like this, like FedEx did here, as a matter of fact, it didn't even trade at these price levels. There was no one in here buying, right? You just don't, you're not going to have remorseful investors or remorseful buyers, because it moved through these levels so quickly. There just wasn't enough time for people to buy. So there's not going to be that many remorseful investors trying to sell their stock. So that means the buyers here now have to pay higher prices, and this could drive it right back up. So that's another thing we look at. That's in our patterns class. We talk about gaps.
Yes, and someone's actually asking about what are the classes, what are the lessons. So I'm going to go over them really quick, and just know this is obviously a broad topic, but there's a lot of subtopics within each chapter, which is what we go through the entire course. So you have here introduction and philosophy to capital markets, levels, trends, momentum, investment psychology, market principles, analysis and sentiment, investment strategies and trading systems, so that you create your own trading system. So that's just a little bit of what you're going to be seeing.
Yeah, this is another example of a gap. that I'm just showing this for educational purposes. Gap down, gap up. So a lot of times when you see a gap, they tend to refill. Now this just kind of caught my eye here. This looks like a classic reversal day. All right, so let's take a look at this, because there could be an idea here on the short side if you're a put buyer. So some days you get these 1 day reversals. Like a lot of times stock takes a long time to reverse, but sometimes the reversal happens in a day. Let's see if there's a lot of volume here, because big volume on a single day is like we looked at that volume on that stock and the Twilio. We remember we saw the big volume trade. All right, so we had big volume on Friday on this, but nothing too crazy, but that doesn't matter. So what do we have here? The stock is going higher. Now, these horizontal rectangles are each a day's price action. If it's blue, it's a day where it closed higher. If it's red, it's a day where it closed lower. So on the blue candles, the bottom of the rectangle is the opening price, and the top of the rectangle is the closing price. On the red rectangles, it's the opposite. The top is the opening price, and the bottom is the closing price. So what do we see? Well, there's a couple of days where the sellers were in charge, right? But the buyers pretty much controlled of this. So it's trending higher, it's trending higher, it's trending higher. Then on Friday, it opened up here at 62. So it looked like it was going to be a good day. It opened up like about $1.50 higher than where it closed. Well, look what happened. By the end of the day, the bears took over and pushed it lower, and even pushed it way down to lower than it has been over the past week. So this could tell us that the tide has turned here. The bulls were in control in the morning. Yeah, this is the 1 day chart. All right, so this is where it opened. This is just Friday. This is 1 day. So at the open, it looked like, wow, this is going to be up. Things look great. But slowly but surely over the course of the day, the bears pushed it lower. So this could be a case where we have a 1 day reversal. So this is definitely something that we're going to have to watch this week. But
okay, so possible trade set. So possible trade setup depending on what happens this coming week.
Yeah. Okay. Yeah, we have a couple other things out there too, but right now, all right, so we talked about FedEx.
Well, one thing, Mark, I know there's a lot of students that definitely have shown a lot of progress, right? Cypher is one of them. I know there's a lot of other guys out there and girls that you've seen personally. They've improved in how they're approaching the trading side of it, how they're managing the risk. Is this something that, I mean, obviously, everybody has a different pace of learning, but would you say that in the trading school, if anybody has a question, there's no issue on getting an answer, right? Regardless of what it is, if it's a question about trading or a question about an entry or general questions that retail traders might have.
Yeah, I mean, we make a good effort to try to answer them all. And if people don't ask during the class, then they can just post it in the office hours chat or the trading chat. And a lot of times, if it's a question that another student can answer, like if someone's really new and they want to know, like, how do I buy calls or what broker should I use? That's something that like some of the other students could help them with.
Yeah. So no, David, we don't talk about Forex. We're all about stocks, crypto, and there's several option traders, but ultimately the fundamentals, what you're going to learn, can help you with understanding charts.
Well, we talk about Forex though.
Oh, you do talk about Forex?
Yeah, we have some students that trade Forex. I mean, the same principles that apply to these charts apply to that.
Well, there you go, David. So we actually do have a community for you. And this is a community for all sorts of traders, right? It doesn't matter if you're an options trader. It doesn't matter if you're a crypto trader. It doesn't matter if you're just buying stock. It doesn't matter if you're doing Forex or, commodities. Ultimately, what we are going over in the trading school is applicable to any asset category. As long as you're trading, as long as it's an asset that is tradable, everything you're learning here helps you with that, David.
This
You're
is the
welcome.
trade I was thinking about that I think we just put this on maybe 2 or 3 days ago. Let me just yeah, I couldn't think of it, but
Yeah, just
this
want to give a
is
shout out here. Sorry to Suraya, our newest trading school member. Suraya, welcome, welcome, welcome.
thank you. So this is a trade that we just got into, right? Because this stock is really oversold. And look what happened. It reached a level that was support before. So just like levels of resistance can become support and vice versa, a level that's important can last for a long time. So there's clear support around 61 back here. So the stock fell to it. We put a buy on it, I think probably on Wednesday. And then, we had this big reversal day on Friday. So some of the students are already up. I would think our short-term target for the traders is probably going to be somewhere around here, 67, because this is where the most recent low was. So we got in around like 61, 90, 62. And if it keeps going, we'll get out around 67. So this one looks like it's working out too. So this is another live trade, so to speak, just like FedEx's. I don't want to just say we got lucky because we went in with good rules, but some of the students got really lucky on Bed Bath and Beyond. But it's good to have good luck, right? So they say it's better to be lucky than to be smart. But anyway, so some of the students brought, or one of the students brought to the class's attention, this downtrend break here, right? See this trend line break? So like, oh, maybe it's a good time to buy Bed Bath and Beyond. They've been watching, this particular student's been watching this ever since it sold off here, right? Waiting for a time to get back into it. So we had this big sell, but guess what? We never broke the downtrend. We're still trending lower. So here back on the 1st, it broke the downtrend. So a lot of the students got into this. We had a really good, strong second day. Then this news came out on Kroger that they were forming a partnership or something with Bed Bath & Beyond. This is a really highly shorted stock. So in the morning, we had this huge short squeeze. Mm-hmm. So I told the students, sell it at the open. It's higher than what our price target would have been.
So where was this entry? Where was the entry for the students?
Right down here when they broke this downtrend.
Man, those calls must have been juicy. Those calls, man.
Yeah, well,
these students are spoiled, man. You're spoiling them, Mark. Too much.
Well, it's because it's like I'm not guessing. I'm not telling people what to do. We're letting the markets tell us what to do, and that's why that's why so far it's been good, and I expect it to continue to be good because we don't guess. We're not like I'm not going to tell you you can learn how to turn $100 into $1 million in 3 weeks.
Right.
We're not champion traders. We're not ninja traders. We're people that are students of the market that are looking for temporary dislocations in the equilibrium. So anyway, so this opens up here, and this was really a big short squeeze, right? This stock was heavily shorted. So I told the students, blow it out on the open because a lot of times these short squeezes reverse. And sure enough, it did. So, this thing went from say 15 to, they were selling around 25. So, I mean, we didn't know the news was going to come out, obviously. So that kind of helped. But our price target was going to be, or was here, the last level of support before it broke. There's a good chance that there's going to be resistance at this level, or we thought there was a good chance there would be resistance at this level because a lot of the people that bought here regret their decision when it went lower. So when we had this news come out that just takes it above our target, it's like, all right, just sell. It's time to get out. So some of the students really hooked up on Bed Bath and Beyond this week too.
Yeah, and I remember this trade from a long, I mean, well, not that long ago, but I remember you called this trade on BBW way before it became a meme stock.
BBW.
BBW, Build a Bear Workshop.
Oh
And
yeah,
you remember this one?
I
All right,
do that.
guys.
Oh look, yeah.
So I'm gonna tell you guys, all right. I Mark provides trade ideas, and this is one of the trade ideas that I picked up. And as you can see, everything is already written there from that
Yeah, like
time.
I probably haven't looked at this chart since then, so all
Yeah.
this stuff is still on there.
And,
This is
and
November and December of last year.
so this is before it became a meme stock, but ultimately Mark's recommendation there was to buy it at about $4. Right now that went all the way up to I think $20. Where is that now? Like about 16, Mark?
Yeah, 16.
$16. So from $4 to $16. Awesome trade. I know there was this other insane trade. Let's see if you remember. DDD. Do you remember that one? You called it in at $9 and then it went all the way up to like 60.
What is it?
DDD, 3Ds. I'm showing you some of Mark's OG picks, guys. So this was one that you sent out in one of the newsletters. I remember.
I mean, I I look at so many of these charts, I just forget.
At $10, we got that entry. And obviously, if you didn't sell it at 60, man, like I don't know what to tell you. But these are some of the Mark's trade ideas are based on fundamentals, right? The truth is in the charts, and I'm just showing you guys. These are some of Mark's trades from I would say like in the mid of this year or earlier at the beginning of the year. Those are some of the old trades before we started the trading school. But now you guys are getting those trade ideas in the trading school. I just want to emphasize that you're getting Mark's trade ideas in the trading school. Those are a couple that I remember. No, that's not a plug for Dennis, Paul.
I see why I recommended this Build a Bear workshop though.
Yeah. So what's up with BBW? Give us the rundown here, like you were doing it when you put out the pick.
Well, this is I don't pay attention to too many patterns. Everyone knows like the head and shoulders pattern. That's probably the most famous one, but a lot of technicians or technical analysts aren't very good because they don't understand the fundamentals that they're supposed to be looking at. Like Rodrigo just talked about fundamentals. The ascending triangle pattern is a very tradable pattern and it's very easy to understand. So everything in a chart needs to be viewed through the prism of what is the supply and demand dynamics. What is this telling me about what is going on with the supply and demand dynamics? So this ascending triangle is a bullish pattern because look what happens. You have, pretend it's a football team. Like you could say this is your defensive line. They're holding still. So the sellers, they're at 465. And they're like, all right, well, it went down. I don't care. I'm not that much of a rush to get rid of it. So I'm going to keep my sell order at 465. So it hits resistance there again. It goes down. Some of these sellers say, hey, I don't care. I can be patient. I'll wait for it to come back and sell it. So comes back, we sell it, goes down again, same thing. Whatever. They can come to me. I'm not in a rush to sell it. At the same time, what does this line show? So this red horizontal line shows sellers are complacent. They held their ground. But what does this show? Well, the buyers are successively paying higher and higher prices. Here there were buyers paying 350. Here they were paying 390. Here they were paying, $4 and higher. So what does this chart show? What does an ascending triangle pattern show about the supply and demand dynamics in the market? It shows complacent sellers and aggressive buyers, right? Now, regardless of what market it is, stock market, crypto market, real estate market, any market, if you have aggressive buyers and you have complacent sellers, that sets the stage for a move higher. And sure enough, this thing ended up working out pretty well. I still don't understand how a company can make money by having kids make teddy bears, but I guess that's
I went to their store. I went to one of their stores, and it's actually a fun experience building your own bear.
Really?
Um, yeah, I mean, it's definitely a once. I mean, you don't do that pretty often, you know. You're not like, let me go pick out a nice bear. Um, it's like a custom gift. It's kind of cute. Someone's asking if the classes are AM PM. They're in the AM. All right, so in the morning. But this is a great pick, Mark. And here's the thing. Obviously, some people like to trade options. Other people like to trade the stock. That's up to them. But you're giving them the right setup, limiting their risk and maximizing their profit, which I mean, they obviously taught you well in the institutions, obviously trading with Jabeli and Cohen. That is the discipline that these guys have. And I think that's going to be very valuable for retail traders because as a trader myself, I can tell you that I did struggle um, with many things that every other retail trader struggles, like position sizing, buying at the top, buying too early, not being patient, not really understanding the charts, and getting impatient. So I really think there's a lot of value here for retail traders. If for any reason what you're trying is not working, I'd give this a shot. It's a 7-day money back guarantee, and you're trading with former hedge fund manager Mark Putrino, who managed over $1 billion in his trading account.
Well,
So
I mean, I didn't. It wasn't a billion, but
with Cohen, yeah, and all these
yeah,
guys. So
we were trading
um,
a lot of money. I mean, my typical orders were, buy a million shares of Intel, sell a million shares of Microsoft, like, big orders.
so the other thing that I want to point out, Mark, in all of these institutions that he's traded different types of stocks. Like for example, large caps, small caps, which as retail traders we love to trade small caps. BBW is a small cap. So you're and also managing pension funds and all that stuff. So you're getting somebody who's been in all sides of the coin and ultimately is just passionate about teaching you guys how to trade like professionals, basically.
I've also seen bad markets too. I mean, frankly, anyone who's only been trading for the last 10 years really doesn't know what a bad market is. Because, we had the COVID crash, but it came right back. But I'm talking about like, the great financial crisis where, firms were going out of business or the internet bubble. So, my recommendation is if you're looking for someone to teach you how to do things, you want someone who's been through multiple different cycles because the rising tide lifts all boats, right? So the last 10 years, trading has been relatively easy because the market's been going one way, but eventually it'll turn, and a lot of these people will end up getting wiped out. I mean, it always happens. It's history is a guide, and it typically is. All right, so let's see. So we look at the S&P 500. This is the S&P 500. This is usually what I do when I go in again in the morning. These days I'd be looking at oil. Well, we looked at it already because oil's, a theme. I look at the SPY.
Do you think you think it's extended, overextended?
Yeah,
I'd
I
say
think we're due for
for a
I think
little
we're due for a
pullback.
pullback. I think we're going to go down to here.
I could see some indecision at the top there. Like people are just not sure if they want to take it higher or not.
Yeah, it's like gapping up. It's like FOMO buying, fear of missing out. Like you see gaps like this at like bottoms. You don't too often see them at tops.
Right.
But like I said, I mean, a big thing could have been the whole, the infrastructure bill that you talked about was $3 trillion. People perceived that to be very inflationary, which it would have been.
Mhm.
When it looked like that was starting to fall apart, I think a bunch of investors thought, all right, well, inflation isn't going to be as big of a concern as we thought before. So maybe that was what's driving this. But regardless, it's still overbought. And, a lot of that is because of what's going on in the tech sector. So these moves here.
Wow. Yep.
So then we look at some of our bellwethers, like what's Microsoft doing. We always want to know what Microsoft and Apple are doing because those two companies together are 12% of the S&P 500. So they're 1/8 of the S&P 500. So Microsoft, we can see is it's a little bit overbought as well. Apple really is kind of neutral. It looks like. A lot
What do
of
you think
people.
about PayPal?
PayPal was PYPL. Oh, all right. Yeah. So this is something good we can talk about. Good. Because so some of the students were looking at this and they're like, is it time to get in? It's gotten to this level that it was support before. See back here around January. This is like 228. So what's the answer? Is it time to get in? I don't know. But who knows? The market knows. So let's draw our downtrend line in, which we did. And now, if you're thinking that this is going to rebound, you just wait for it to break this downtrend line before you get in. If not, you're just guessing, and it could keep going lower. I don't know what the news is.
Yeah, it's definitely all right. So let's get a feel. Let's get a feel for what people want, how they're feeling. Give me a 1 in the chat if you think it's time to get in to PayPal, and give me a 2 if you think it's time to get out. 1 to get in PayPal, 2 to get out. A 2, couple ones there, several ones, random 2s in between. Okay. Keep them coming, guys. I need to get a good feel for this. I need to feel the temperature in the room. Okay. I don't know what 3 is.
3 could be, I don't know.
Sideways.
We're going to wait to see if the downtrend line breaks first.
And 3 is sideways. Okay. PayPal has earnings this week. Yep. I'm holding PayPal long term. So I'm curious to see what you guys are thinking about. 1. Okay. So we're getting a lot of 1s, a couple of 2s. So I feel that people are a little bit on the fence about this. You either have extreme bullishness or you have a couple cautioned folks. So what's the deal here? Does anybody know why PayPal is falling so hard? Depends on the news. All right, let me just pull it up here on my Pro. Just gonna go to PayPal really quick. Okay, yep, I see the news there. Right. So, I mean, PayPal was a huge winner during the pandemic, Mark. Seems like a lot of, and then you have, all right, so, okay, we went over PayPal. Okay, I get it. You guys want to get in, but you're uncertain about the news. How about, let's go to Peloton. Let's go to Peloton, Mark. PTON. Peloton is this treadmill bike that has like they're like software, but they're also not software. It's like a mix of both. They have a subscription based model, but they also have the bikes, and they lowered the prices by $400. So they have a huge supply. But is the stock really worth $50? Like from 160 to 50? Do you think so? What is your take on Mark on Peloton?
I mean, I wouldn't touch it here. I would wait. I mean, it looks like you keep going, but again, that's the thing. It's like, if I just said, all right, well, I don't see any reason to think that it will turn yet. And part of that is by just the action on Friday, right? Things that tend to, like when bad news comes out, if it's overblown, the stock will open down, and then during the course of the day, it'll recover somewhat. If I look at the 1-day chart from Friday on Peloton, this is just 1 day. Whoops. Okay, I see what happened. All right, it's all right. So Peloton was here, and then it opened way down here, right? So this is,
yeah, the earnings were bad. They give bad guidance. The huge
supply
inventory.
This is all right. So it came back a little bit up to 61, but then it slowly trended lower over the course of the day, right? So think about what happens. This news comes out in the morning. Mm-hmm. All the companies that are the investment funds that own it, they start doing the analysis. They look at the new numbers, they do their modeling, and if they think it's an over exaggeration in the market, then they'll go in there and buy. Now, what if they start looking at all their numbers and do their analysis and go through their models and say, hey, this thing really is in trouble. well, then it'll happen. It'll sell off over the course of the day. So Peloton opened around 57. It spiked up at 61, but then it just went lower. So we didn't see any reversion in the on the course of the day. So that's
you'd wait for anything on this. We'd wait for a more important level. I mean, this would fall great into the class of levels really that we're looking at.
Yeah, I mean, we would wait for again, we will wait. Like if you're thinking, should I buy it? Should I not buy it? It's down so much. Remember, just because something's down big doesn't mean it can't keep going down. A lot of times people say, well, a stock was at 10 and now it's at 5. So now it's got to be a good buy. Well, a stock that's at 5 can go to 0. A stock that's at 100 can go to 0. Mm-hmm. So if I was considering playing this Peloton, I would just, I'd have it on my radar screen and I would wait for some kind of reversion or reversal to happen to tell me the selling is done. And I mean, on Friday, it didn't happen. So there was no reversion. It sold over the course of the day. So that's why when I look at it, I would still say, like I wouldn't buy it here. I would wait. Had it reversed, like went down and then ended up closing higher than where it opened, then you see that's a possible reversal going on.
Okay, now let's do a full 180. Let's go into PLNT, Planet Fitness. This Planet Fitness, you already know what this is. If you don't know, this is like a real life gym that you actually go to and there's people there. So these charts seem to go in opposite ways here, right?
Yeah, because this means the perception is that people are going to stop working out at home and go to the gym. So I assume that's what's going on here.
Right. Absolutely. That's what's going on there. So we're seeing the full on, opposite of the reopening. Well, I mean, the reopening happened in real time, but, Peloton, another stock there that got plummeted. You're seeing all these, COVID winners become COVID losers now.
Yeah, exactly. It's like the reverse of what was going on before.
Yeah, these are just themes, market themes. It's one of the many market themes that are going on right now that we go over in the trading school. We're looking at, like Mark said, dislocations in the market. We're following trends so that you're not surprised by these moves and you're actually able to catch them. Now, I do want to make sure everybody knows that everything that we're going over here, right? These stocks and these setups, we're just scratching the surface. We follow up with all these trades in the chat room, in the trading school, if there's an actionable trade idea. So these are all concepts that, and trades that we'll be following up with.
Yeah, I just wanted to point out here, one of our most basic principles is just the levels, right? So we could see how Planet Fitness peaked around $88 back in February of 20. And then look at February of 21, a year later, it peaked at the same level. And then again in April, it peaked at that same level. So going forward to now, we had this big move up, but on Friday we had a reversal. So if it keeps going lower, where would I expect there to be support? Well, right around 88, because it was resistance. So it would be an example of a level that was resistance converting into support, something that we talked about before. So, you can look at like almost any chart. You can see certain levels, or some levels are more important than others. Oh, look at this on Amazon. You want to see a really good example of something.
Yeah, what's going on with Amazon? So it was like flat for a whole year, and then it just started making moves now, right? So,
all right, yeah. So look at where look at where it's
I like it there. Look at
where the rally ended on Friday. So let's go back to our talk about important levels, right? So back here in September of 2020, Amazon peaks around 35.30. All right, so now let's go to April of this year. The stock rallies, and that's right where it finds resistance. Same level that it did before. Sells off, goes higher, hits resistance again. Then it breaks through, and what happens? The level that was resistance turns into support. We see that here. Then the level that was support becomes resistance. So for whatever reason, who knows why, this 35.30 level is important. And now look at where Amazon closed on Friday, just under 35.18. So this level was resistance again on Friday. So now going into Monday or Tuesday, if you're an Amazon owner or looking for a trade, you may want to see if this level breaks, and then it could make a quick move higher like it did back here. But again, you don't want to guess. You want to let the market tell you what to do, because there's a chance that it doesn't break and it reverses again. But this is what I mean by like the real-time concept of understanding the basics of, like, say, levels that we're talking about here, and how you can use this to profit from. Because you could say, gee, Mark, that's great, I believe you. Some levels are more powerful than others, but how can I use that? Well, you can use it for having your price targets. Like, say Amazon breaks out and you buy it here, right? Well, what could be a potential price target if you're a trader? Well, the last time it was at 3,700, there was resistance. So you could say, all right, well, I'm going to buy it here around 3,600, or sorry, 3,500, 3,550. And if it gets up to 3,700, I'm going to sell it. See, by looking at a previous level, it can give you an idea for a price target. We can look at the same thing down here on the bottom, right? So Amazon doesn't get through this resistance, or fails at it. As trader talk for it, doesn't get through it. So it failed at this resistance. It's trending lower. Now if you're thinking like, gee, Amazon is trending lower, where would be a good place for me to buy it? Well, look at the level that was support, 31.90. What happens when Amazon dropped to that level? Found support right around, like, to within $1, and then it rallied. So by knowing where these levels are, it's going to help you with your targets. It's also going to help you with your order placement. Like, for example, say you were interested in buying Amazon, but you thought it was too expensive up here, and you said, Amazon's trending lower. If it gets to 3,100, I'm going to buy it. Well, guess what? It never got there. So you never would have bought it. And now it's up to 3,500, and you'd be kicking yourself saying, why did I miss that? Well, you missed it because you didn't understand that there was support in the market above where you wanted to buy it. Had you been aware of the support, you would have placed your order up around here, say 3,200. It's not as good as buying it at 3,100, but it's better than missing it altogether, because you would still have had a nice profit. So this goes back to the theme of don't guess, let the market tell you what to do. I mean, that's in a nutshell. I think that's why the trades ideas that we've talked about are successful, because we're not guessing. This isn't like, guessing or saying I have some secret system, or, you can have a Lamborghini from $100. This is like, all right, well, what's going on in the market? I like this analogy of like a medieval market, right? Where all the merchants come from all around to buy and sell their goods, and all the people come into the market to buy and sell. Now, say there's like one path in and out of town, and someone goes up and they're watching the wagon trains come in, or the wagons come in to bring in this stuff to the markets. And say this person is shrewd, and they say, doesn't look like there's as many carrots as there should be. Typically there's 10 wagon loads of carrots, but now there's only 2 wagon loads of carrots. So what would happen? Well, that would tell that person, there's going to be a shortage of carrots. That means there's a good chance carrots prices are going to go higher. So they go back into the town before anyone else does, or into the market, and they quietly go around and they buy up all the carrots. Then after the market opens, people want to buy carrots. There's not enough of them around. They have to pay higher prices. This merchant turns around and he sells the carrots that he bought at lower prices to the people at higher prices. So this particular merchant might not know anything about growing carrots, or they're not a farmer, but they understand supply and demand dynamics in the market. That's what we're doing, but we're just doing it in the stock market. We're not doing it in a medieval, or medieval farmers market, or whatever you want to call it. So we let the market tell us what to do. We don't guess. It's kind of a rolling joke I have with the students, because I went through all these trading classes, which I guess you would call our competition. And it's just like, learn how to be a champion trader, learn how to be a a ninja trader, learn how to be a market guru. It's like, that's not what we are here. Here we are students that just want to learn about the markets. We realize that what works for one person might not work for someone else. Like, say you have like a really, aggressive personality, and you're really kind of whatever. You got a lot of energy, you really like the markets. Well, you might be a day trader or a scalper. That same personality, if it was a long-term buy and hold strategy, might not work because it's not conducive to that person's personality. Now, say you have another person who's just, passive and mellow and chill, and they don't want to stare at the markets every day, all day, every day. Well, that person might have what we call a swing strategy, where you hold a position maybe for a few days or a few weeks. Or, that person might be a long buy and hold investor. So there's no one size fits all. You have to do what is right for your personality. I mean, today's, football's on, right? If you made Tom Brady a linebacker, he probably wouldn't do that good of a job, but he's a great quarterback, obviously. So you got to do what fits your personality.
This is a great segment, Mark, because as a retail trader myself, that's something that I struggled with. It was, let me try OTC stocks, let me try options, let me try this, let me try crypto. You're all over the place, and you're not. The most important thing would be to find out what kind of trader fits your style and ask yourself, are you comfortable losing 50% of your trade if you can make 50% of your of gain? So asking yourself those questions before you find yourself in those situations, when you're already down 50% or something like that.
Yeah, like some traders are more aggressive, right? So let's just look at this Amazon here. Let's just put in this downtrend line from when we were back here. Well, an aggressive trader might say, well, we're in a downtrend and we've reached a previous support level, so I'm just going to buy it here. Someone who's more conservative might say, well, I need more confidence. I need more conviction. I'm not going to buy it until this trend line breaks. So they would buy it up here. So the aggressive trader would buy it around 31.90, whereas the less aggressive trader would buy it around 32.63. But there's no right or wrong answer. It's just what fits your personality. So someone who's more passive, they're going to need more indications or more conviction. Someone who's really aggressive, well, just the fact that it got to a previous level might be enough. Some people, might be okay if they lose 10% of their money on a trade. Other people might want to keep that to not losing more than 5% on a trade. So, when you see these classes where it's like, someone's like, well, I can teach you my style, or you can pay money and watch me trade and all this kind of stuff. I mean, I don't know. I mean, if people are successful at that, then that's great. But I just think that you have to do what fits you. And if you're doing something that's counter, I don't know if counter to is the right word, but if you're doing something that's counter to your personality, the odds are you're going to have really bad results. I mean, I can never be what we call a fundamental manager, right? These are the people that are your traditional buy and hold. They read a company's earnings statements, balance sheets, and they figure out if something's undervalued. Like Mario Gabelli is the classic growth investor. That's how he got really famous and rich and started out, by doing that. Like, I could never do that. That would bore the heck out of me. I can't stand reading income statements. I mean, I know how to. I've done it before. I've been in an analyst role where I analyzed companies and listened to earnings statements or listened to earnings calls and read earnings statements, but it really just bores the hell out of me, man. I would never be that would not be a good fit for my investing style. My style is more, when I do trade, I'm looking for, things that maybe play out. Like, people say, like, how do you know what time frame to use? Well, sometimes you let the market tells you. If you buy it here, right, and you say, well, if Amazon gets up to 35.30, that's where I'm going to sell it because I know that's an important level.
Mm-hmm.
Well, if it got to it here, you would have sold it on October 19th. You got to it on November 5th, so you sold it then. If it didn't get there and it got up to there on November 17th, you would have sold it then. So you're not going in there with a time frame saying, like, I'm going to hold it for 1 week or 2 weeks or 3 weeks. You're going in there saying, here's where I sell it. If it gets there today, I'm going to sell it. If it gets there in a month, I'm going to sell it. So you let the market tell you what the time frame is.
You have a plan, you have a strategy, and ultimately, if you lay out a plan, the other thing would be to actually follow the guidelines, because there's a lot of people, let's say that, they join the trading school as an example because they want to trade responsibly, they want to make smarter trades, and they're doing YOLO trades on the side. And what I'm trying to emphasize here is that if you follow the strategy, if you follow the actual system that we are doing with Mark and his trades with patience, right? Because if you could have bought at resistance, Mark, thinking that it was going to continue to go higher instead of possibly waiting for a better entry, because of the impatience, right? Because of greed, put simply, right?
Well,
So
this is why most traders fail. It's because of emotions. Now, like I said, I've been doing this for 25 years, right? In my 25 years, Rodrigo, I have never seen a bad back test or a bad paper trading strategy. People trade on paper. That means they come up with a system and they write down where they would have gotten in and gotten out. And, it could be, they find these systems that work out really good. It's the same thing with back testing. That just means you take a method or a system and you use computers to go back in time saying, well, if I did it over this period, this is what my returns would be. Why do these things not work out? Well, because they don't have emotions. When you're trading on paper, you don't have emotions because you don't really care if you're making money or losing money. And if it makes it easy when you don't care, because you're not going to be emotional. The thing that you need to learn to do if you want to be a successful trader is how to not eliminate your emotions, because that's not possible because we're all humans, but how to understand like what is going on in your head and why do you want to sell it? Why do you want to buy? Why do you want to buy something? So a lot of people feel like they should always be in the markets, and that leads to over trading. It's okay to take a day or a week to just be at, like, when in doubt, stay out. Like, don't be in. It's okay to not be in the markets. So the biggest problems people have is their investment psychology, and this is what we talk about in our lesson 6, investment psychology. And you could just see it everywhere. Like, people are animals, right? And we have these evolutionary instincts that make us do irrational things. I'll give you a perfect example. How many times have you been driving and you pull up to a toll booth and you're on a highway and like all the cars are going into like one toll booth there, and then you look around them and say, like, wait a second, way up there, that toll booth that's empty, that's got a green light, should I just go through that? So you blow by all the other cars and you go through that green light, right? Or you go through the toll booth with the green light, and then you look in your rearview mirror and you see people are following you. But that's the human, the herd bias in action. You see the toll booth, it's like, man, everyone's going there, they must know what's going on, and you just instinctually are drawn to them. And this sounds like a kind of a funny example, but this is like one of the main reasons why people lose money. It's because they think they make emotional reactions. If you were emotional, you would have gone on the back of that line and just waited for all the cars that were in front of you. If you were able to separate your emotions and think logically, you could have looked up ahead at the toll booth and said, hey man, I could blow by all these cars and go right through this. So, something you see an everyday example of is people like, when their instincts or their emotions make them do decisions, they do illogical things, like wait at the back of like a 50 car line when they could easily just go drive up around it. So we see things like this every day. And again, it sounds like it's a little silly, but the emotions are what make people fail. Like, fear is probably a good emotion 20 years ago. Like if you were hunting a tiger or if mammoth was coming after you, it's like, all right, you become afraid and your adrenaline gets pumped up and you get laser focused, right?
mm-hmm.
Great. That could have helped you back in prehistoric times. Now, if you buy a stock and it goes up, well, you have this fear like, oh, I'm going to lose my profit. Or if it goes down, you don't want to sell it because you have this fear you're going to lose money. And that fear is what makes people do dumb things. By having a plan and by being aware of this, it's, you're 90% of the way there.
Yeah, and I mean, part of being emotional as a trader is part of being a new trader, right? When you are starting to trade, when you are very new to trading, it's obvious that you're going to be emotional about it because you don't have any experience to back on, right? Like, when you have a big job at work, yeah, you might get a little nervous, but you know that you can get the job done, right? You know how to, you follow the motions, right? But if you're new, you really are just emotionally trading. The entire plan becomes emotional. You're only trading whatever is trending on any of these platforms. You don't really do any analysis on the charts. You don't really have a plan. And then if it doesn't go your way, you automatically start panicking and you sell for a huge loss and you repeat the process, right? So this is the new traders, a day in the life of a new trader, you could say. So this is basically giving you a plan, right? You follow a strategy, you follow what we're doing, and you learn from it, right? Because you want them to be able to do this on their own. And actually, that psychology class, Mark, that's I would say it's my favorite class. I love psychology. It gives you an insight into really what is going on in traders' minds from the institutional side as well, which is where you had your training and your background. But it's also great for retail traders to have that reminder, that session of to not let your emotions, control your P&L, right? Follow a plan and a strategy instead of being an emotional trader, for sure.
Yeah. If not, you're not going to win. And here's another thing that I think beginners make of this mistake. And actually, some people that have been doing it for a long time make this mistake, but those people might be doing it for a long time, but they're still not that good. Is you have to understand this, right? And it's counterintuitive, but it's not about being right. It's about making money. The only thing that you should care about is how big your brokerage account is. All right. Let's go back to this example of Amazon. Say you're waiting for this downtrend line to break before you buy it. Okay, great. You bought it here around 32.60. Well, are you going to look back and say, yeah, if I bought it yesterday, I could have gotten a better price. If I bought it the day before, I could have gotten a better price. True. But we're not worried about being right. We are worried about making money. So it gets up here, then you sell it. Well, could you have bought it at a better price? Well, yeah, but you're never going to be to always think you're going to get the best price is like a golfer thinks that they're going to get a hole in one on every par three. It's just not going to happen. But a good golfer, what do? They get the ball close to the hole. They don't get it in the hole. I mean, sometimes they do, but that's very rare. Arnold Palmer, I think, only had something like 12 hole in ones in his entire career. One of the greatest golfers ever. Played 50,000 rounds of golf. But anyway, the point is it's not about being right. If you follow your rules and you make money, then you've done a good job. That is your job. Your job is to follow your rules. Your job is not to always try to get the best price. Paul Tudor Jones is one of the another famous money manager who I've never worked for. I've actually played basketball with him at the Greenwich Y a few times, but he's another legendary money manager. And there's a quote I read by him where he says, "You're always going to sell stocks that go to infinity, and you're always going to buy stocks that go to zero." And of course, he's exaggerating and being a little bit hyperbolic, but this is one of the greatest money managers ever, telling you you're never going to be right. You're always going to be wrong. You're never going to be perfect. And that's just how it is. It's not trying to get the best price. It's watching your brokerage account and seeing, is it growing or is it not growing? That's the only measurement for success in this game, right? I mean, it's like, think about a football game. Well, you could say, well, we had a better defense and, our quarterback was better and blah, blah. Well, guess what? The only thing that matters is who's got more points on the board at the end of the game. Whoever has more points won, right? They didn't have every play was perfect, but, they won. So I know this sounds a little counterintuitive, especially if someone is new at this, but it's about making money. Like playing golf is about getting a good score after 18 holes. It's not about birdieing every single hole because it's just not going to happen. So that's one thing that we talk about in the investment psychology class. And what's the definition of success? Well, it's sticking to your rules. And not letting your emotions make you do dumb things. I mean, it's not just in trading, it's like in other areas of life. People let their emotions get the best of them. Someone loses their temper and gets into a fight, or at a bar or whatever. I mean, the emotional decisions really are never never good ones.
Yeah, yeah, and the worst part is that as a retail, I mean, and look, I'm okay opening up about my experience as a trader, but like, when you're starting and you really don't know much, and there's so much unknown, there's this feeling that you feel that you can be that 0.001% that beats the market without any prior education or any, and you're not even thinking about that at the moment because you're just thinking about the money you can make when you just get in. So, and that happened to a lot of people that got into the COVID trade, right? As soon as COVID happened and everything tanked, everybody was like, well, I need to get into this. It's a good opportunity, which is good, right? But definitely nobody was thinking about the education like in the gold rush. During when that happened, nobody was thinking about taking classes on how to mine gold, right? They just went at it. And that's why it's important that you guys take it into consideration, because there's a lot of mistakes that you can do as a retail trader that can cripple your account little by little if you're not careful. So having a plan, investing in your education for trading is definitely something I'd consider if I would be able to start all over again, for sure. So that I learn by actually going to a class and having an instructor who's done it in Wall Street with some of the biggest names, instead of trying to figure it out on my own. That is probably the only thing I would change when I'd say, Mark, when I started.
Yeah, I mean, it's like you do anything, right? You don't you want to take lessons from someone who's going to teach you. Like, for instance, you don't go take karate to hire the sensei to go kick someone's ass for it, right? You take karate so he can teach you how to do it. You want a teacher that's going to, it's like, you don't just get in a plane and fly it without taking flying lessons. You don't just pick up a guitar and play like Jimi Hendrix without taking, guitar lessons. So, trading, it's just like anything else that's important. You should spend some time learning about it. And it really doesn't have to be that much. Like, one of the things that we focus on in the class is it doesn't need to be complicated. Just these examples I've showed you of just knowing where important levels are and understanding what trends are, you could have made some good trades, like that Twilio that we talked about, or the EHC that we just showed. It's not we're not doing anything. We're not doing Elliott waves or Gann theory or Fibonacci
Gamma squeeze.
or,
We're not looking for gamma squeezes. None of that.
yeah, we're not. I don't even know what that is, but I'm sure at some point in my life I did gamma or deltas. It's just like, go back to the example I gave about the merchant and the market. I mean, it's simple. It's recognizing, like, here's what we do. Okay. We are looking for things that are in and out of equilibrium. I call what I do market equilibrium analysis. Like, when I had my own firm, that's what my title was. So I don't like the term technical analyst. I just think it's too generic. But market equilibrium analyst, we are looking for things that are out of equilibrium, because if they're out of equilibrium, they move. If they're in equilibrium, we don't care, because we can't make money off something that's not moving. So we want to look for things that are overbought or oversold, or at a level where there's more demand than there is supply, or at a level where there is more supply than demand. That's when we get these moves, and that's what allows us to make money. So it's real simple, man. We're just looking for stuff that's out of whack and trying to ride it to when it gets back into whack, I guess. Reversion to the mean is one of the most common things that trading styles are based on. Something gets overbought, sellers come in and knock it lower. Something gets oversold, buyers come in and they drive it higher.
Right. And this is, it's very helpful for people that are starting to trade, that are learning how to trade, because ultimately there's a couple things here that really get lost in the conversation. Like, for example, who benefits from traders going into the market without any education? Goldman Sachs, all these big brokerages, those are the companies that benefit from you blowing up your account and all that sort of stuff. So if you're going to do that, you could go ahead and might as well send them a check directly to Goldman Sachs, or You could really try to get the upper hand in this, because the markets were not meant for retail trading. We are just in it for the wave. We are just riding the waves that big money is pushing, either way, up or down. So as retail traders, we need to be able to spot those things. And as a community, we do that pretty well with Mark's guidance, obviously, I'd say for sure. Okay, Scott. Yeah, Scott, I'll send you an email with the link. Um, yeah, Mark. And ultimately the other thing, right? So yeah, Goldman Sachs and all these big brokerages benefit from new traders that don't know what they're doing. But then you got to keep in mind that when you're trading stocks, you're buying, there's two people in the transaction. You are buying something and someone else is selling you something, right? So more experienced traders take advantage of new traders in that sense. So that's why we're trying to make a concerted effort here at Benzinga to educate retail traders, even if you're just starting. We have people from all experience levels, right, Mark?
Yeah, pretty much. Yeah, we have people that are just starting out, and we have people that have been trading for years that have done okay, but they want to get better. We have people that have been trading for a long time that just can't figure out why they can't make any money. So yeah, we have all the only prerequisite to the class is that you want to learn. This isn't somewhere where you come and you say, oh, what's the trade idea of the day? You know, we, like I talked about, we come up with ideas, but we come up with them together, and maybe one day we don't come up with an idea. Maybe the next day we find 5 ideas. It's all going to depend on how much the market is moving. So that's, that's it. The only prerequisite is I want people that want to learn. And frankly, the people that are just starting out are almost better off because they don't need to unlearn anything. Right. So yeah, we have all levels, beginners, like people that are, just very first time getting in the market, trading, $100, $200. Then we have students that are trading hundreds of thousands of dollars that are very well off. It's all levels. Everyone is welcome as long as you want to learn. And also too, it's not a Mark, what do you think of this? What do you think of that? What do you think of this? What do you think of that? Because if that's all I did, it would take me like 10 hours every day. What I want to see is, Mark, take a look at this chart. I think this is a support level. Would you agree? So I try to encourage, the students being active, and I just don't want to drone on to them at all. I want them to, be active, and because that's how you really learn. I mean, you can, it's like, I always use this example about boxing, right? It's like, you could lift weights, you could run, you could work out on the heavy bag, you could think you're like in good shape, but until you actually get in the ring, with someone else, you don't really know what boxing is all about. And it's the same thing here. Until you're like looking at the charts yourself and coming up with your own ideas and asking yourself about, did I make this decision because I was emotional, or, did I make this decision because I was scared? Until you start doing that stuff, then it's just not going to be as effective. You could just go read a book.
Right. Right. And this is the value right there, where you get a new trader who really, I mean, is in danger of blowing up their account. It happened to me twice. So I mean, that's what we're trying to avoid. You have no idea, Mark, how many calls I get, like, just when I'm talking with folks on the phone, they talk to me about, some of their trading experience and how they blew up an account here or there. And it seems like retail traders, we all make like the same mistakes. It seems like it's always the same typical mistakes. And part of overcoming that is trading with a system, right? Having an education on trading from somebody that's been doing it for a while in Wall Street, right? Not just going to the Wall Street Bets or Reddit and trying to get like trade ideas there.
Yeah, I mean, if you know what if you know what you're doing, you should never get blown up because, yeah, I mean, of course, maybe a meteor hits, Washington, D.C. tomorrow and the markets crash or whatever. You can't avoid that. But, you should never risk more money than you would be comfortable with losing. And, in other words, if you have $10,000, well, don't put all $10,000 in the one stock. Maybe you put 200 into a stock or 500 into a stock, depending on your, your personal, what they call risk tolerances. But you should never have all your eggs in one basket. It might work out for you in the short run, but in the long run, It's not going to. So we need to, there are certain things we can control and there are certain things that we can't control, right? We can't control having losses. Every system in the history of mankind has had losses as be part of it. The great traders, the Steve Cohens, the Mario Gabellis, they make decisions that go against them. But what can we control? Well, we can control how much money we lose on a loser. We can, by knowing where our stop is going to be, we can control that. So that's one thing we can control. We can't control if we're going to lose or not. It's always going to happen. But we can control how much money we're going to lose. And part of being really successful is never having the big blow up. Never, it's like playing golf. If you just spend 18 holes trying to hit good shots, you're going to end up with a good score. But if you have a hole where you go in the water or you're in the woods, well, it's going to ruin your day. And it's the same thing with investing. By worrying about the losers, we let the winners take care of themselves. And what do we do with the losers? Well, we get rid of them before things get too bad and the loss becomes too big.
Yep. Let's take a look at Ford. Let's see what you can tell us here about Ford, Mark.
Well, it's had a huge move higher. I think it's kind of running out of steam though. But again, what do we do? Well, we put in our trend line. So if you're long it, you ride it up. Then it could go up here, it could keep going. But if it is going to roll over, one of the first places we'll see it would be when the stock trades on the other side of this trend line. I mean, I would expect some profit taking. It's had a really big move.
Mm-hmm.
I'm not saying like for the long run, it's not going to be good, but there's just going to be some kind of reversion here. Like the same thing with Tesla. Tesla's had this huge move, and it's the same thing. Like if you roll this up and you don't know where to sell it, well, you put in your trend line here. So we'll just pay attention to this. And I mean, think about this, just how the way it works, right? If it's going to start going down, the price is going to cross this line. So this would be an early signal that that's happening. And this is why trend lines are so good to use. They're really Tesla, just a way to make it easier to visualize.
It's a big winner, Tesla. I know that's one that you've been covering for a while. But yeah, it seems like you have a good knack for charts. I remember you wrote an article September 16th in the article where you pretty much, somewhat called the top on that overextension. I don't know if you remember that article, but basically, yeah, I mean, it definitely feels like you have a good touch for charts. And that's really the golden nugget for a trader, right? For a swing trader, for a day trader, being able to recognize these levels, recognize momentum, patterns, all of that.
Yeah, well, I've been doing it for a long time, so I have a lot of experience.
Yeah, that's definitely great because, when you're a retail trader, you're starting, sometimes you end up following the wrong people, you end up going to the wrong community. That's something that I experienced when I started. I didn't really feel there was much of a retail stronghold for retail traders until I kind of came across Benzinga, where the focus is completely retail trading. And that's really, where I feel that I can align myself with on helping retail traders, helping, the average Joe not blow up their life savings account on trading some weirdo stock,
Yeah, we don't want to use the term blow up in our class ever, unless we're talking about preventing them. But yeah, we want to avoid that. And we can. It's just a matter of having the rules and sticking to them.
Right. And another, I mean, we're giving you like little nuggets of information, little golden nuggets of education throughout this workshop. I know a lot of people have had a great time here. It's been really good here, Mark. And
okay, cool. Yeah, I was gonna say I got some things I gotta do, so I'm probably gonna have to get going pretty soon.
Yeah, so let's do this. Can we do a couple of tickers, Mark, and then just get some closing remarks from you?
Sure.
Okay. All right. So tickers from the chat. Do you want me to look at them or do you want to call them out? I say let's grab some tickers from the chat. All right.
Okay, yeah, give me some to
All right, we got Palantir, PLTR. Or just a couple. Don't go crazy, guys. All right, that's enough. That's enough.
yeah, I was looking at this morning. Yeah, now you see a lot of times I'll see something like this and I'll just say, I don't see anything going on here. And I'm not trying to avoid the question, but when I'm looking at something, what I'm looking for is, do I think there's going to be a big move that's imminent? Like, is this thing about to move? Is it overbought? Is it overextended? When I see this, it's just, it's pretty neutral to me. It's just trading where it has been over the past week. I guess I would probably put in my trend line here, just something to keep an eye on if you're long it. What would I be looking for a potential price target? Well, what do? We look at our former resistance levels, because if level is resistance, it tends to stay intact. So, here's something you could do. It's as long as it's above this trend line, you just stay with it. But if it gets up to around here, that's when you consider selling it. And again, I'm just talking for the trading perspective. I'm not talking about if you like the company long term, you think it's going to be worth $100 a share. We have a shorter term focus in the class. So as a trader, that's what I would be looking at. This uptrend and this resistance.
Okay, let's go ahead and look at, all right, we already did that one. Let's go about Microsoft.
Yeah, Microsoft looks like it's a little bit overextended as well. No, nothing crazy. I mean, again, I would be looking for, I mean, this is, it's overextended. I think from a trading point of view, it's something that you want to just keep an eye on for a little bit of a reversion. Again, if you like this long term and it's in your kid's college account or something like that, I wouldn't worry about it. But if you're a trader, it's really overbought, and you could just put in your little trend line like right here, and just kind of watch that. And whoops, and as long as it's above this line, you should be okay. But if it crosses it, then you get ready for a reversion or a sell-off. I mean, it could keep going all the way up here. It could keep going all the way up here. But what we're doing is we're not guessing. We're waiting for the market to tell us when it's about to turn.
Okay. All right. Let's go over EXPE.
EXPE?
Yep.
Expedia. All right, so I see something here. So I guess they must have some news, but what I see is a stock that has moved up to a level that was resistance before. It was 180 level. And that's probably why it stopped here on Friday. So I see a stock that's overbought and it's at a level that was resistance. All right, see back here and through here. So, I mean, I would be, without knowing anything else about if there's any news coming out or earnings or anything like that, to me, this looks a little bit overdone, and I would expect some profit taking just because of the fact that it's overbought. You can see that on this RSI indicator down here. See, last time it was overbought here. It's not quite there yet because this move wasn't just one day, but with a few more days of data and put it into as an indicator, it would show it. But yeah, so I see this and I'm thinking, all right, let's watch this thing for a reversion. As a trader, again, if you like it long term for an investment, don't do anything. But if you're a trader, I'd be waiting for this thing to reverse. Or conversely, you could be waiting to see if it breaks out. If it gets above this resistance and holds for a few days, then there's a good chance the uptrend continues. So when something gets to an important level, it's like they're at a fork in the road. It's either going to go one way or the other way. It probably is not going to spend a long period of time just trading right around this level. It's probably going to go up or down as opposed to sideways.
Okay, and this is part of that reopening trade, of course. Yes, we already did forward. Let's go over Facebook, or should I say Feda. Meta, Meta cheese.
Oh, Zuckerberg. Well, I don't, it's not going to fool me. I know it's Facebook. Yeah, I mean, this, neutral momentum. I see, it's a little bit of resistance here. I mean, I don't know if I was going to trade this, I'd probably wait for this 342-ish level to break, get above there. We can see on Friday, it did. On Friday, the high got up to 346, but it reversed and closed below this level, right? Just want to make sure everyone sees this. So this level was resistance. It looked like it was going to close above it, but the bears came in and pushed it lower on Friday. If you look at the one-day chart, you can see what I mean. So looked like it was going to go higher, but right around 12:30, the bears came in and started knocking it back down. And this blue line here is that level I just showed. So if you're a day trader, I get this a lot. Day traders are like, how far back should I look at the chart? Well, if you're a day trader, you want to be aware of where the important levels are. So this blue line here is this blue line here, right? So this is, each one of these candles is a day. This goes back to August. Each one of these candles is a minute. This is just a one-day chart. But if you're a day trader, you're going to want to know where this level was, because look, it was resistance, it was support, it was resistance. So yeah, so that's an important level, 343-ish. And then you can put in your uptrend line if you want.
Okay. All right. Yeah, that's definitely an interesting trade setup there.
Yeah.
Okay. All right. So, all right, Mark. So what are some closing remarks here on your end and what you expect on the market, what you're going to be looking at in the trading school for the upcoming weekend and for the prospect students here?
Well, I mean, we're going to be following the inflation story, oil. Like I said, I think SPY is a little bit overbought. I think we'll be looking for a little bit of reversion. Yeah, I see SPY is a little bit overbought. So we're going to be looking for the reversion. We're going to be looking at our tech sector, which is overbought. So, I think there's two things that make this class different, Rodrigo. One is the instructor has a lot of experience, right? Versus someone who, started doing this for 5 years ago and they got lucky. Now they think they're really good at it. And the other thing is just this real-time application to the markets. We actually focus on what's going on in the current day-to-day market, as opposed to me pulling out a chart saying, oh, last August I said this was going to happen, and sure enough, it did. We do things in real time, just like we were talking about these particular names today. So when we watch that, XLK, yeah, look at that. I mean, it's hard for a stock to sustain a move like that. We're going to be going through the trades that we have out there, like I talked about, this one, and Compass Health. So we can see this thing has reversed. I think it still has some room to go. And then we'll just talk about whatever happens in the market, whatever is going on. But yeah, I think that's what I'm most proud about, is that we have the real-time application to the market. Because anyone could look at a book and say, hey, 8 months ago I said this was going to happen, and sure enough it did. Well, we have real-time things going on here.
Yeah, absolutely. And that's a great value. I remember calling the bottom on oil at 60, all these other great plays that I've been following up very closely, Mark. Well, I'm going to stay here, guys, answering some questions. I'm going to show you Benzinga Pro. We'll go over a couple names there just to show you how it works. But yeah, Mark, definitely appreciate your time today and staying here with us.
All right, cool. Thanks everybody for checking this out, and hopefully you'll give the class a try. I think you'll be glad you did.
All right, Mark, thanks for being here with us.
All right, so long.
Okay, all right. So I'm not sure if you guys can see that on the actual screen. Let me know if you can see that, the Benzinga Pro. Okay, I think you guys can see it now. So yeah, I'm going to show you guys the trading school really quick, and we're going to go over Pro as well after. Let me just pull up the chat and get set up here. Okay, everybody can see it. Yes, no. Okay, now you can see it though. So I did something there. Yeah, if you guys want to know more from Mark, I'll leave the link for sure for the trading school. And what you're seeing right now is the actual chat room there where he's putting his trades. So those are all of Mark's trade setups that we've put there. He's the only one that can post there. So, you know, there's no noise. You're basically just getting his trade ideas. And then you have a trading chat room. This is for everybody else, all the students, where everybody's posting their trade ideas. They're talking about the school and whatnot. Office hours, if you need any additional help on any lesson or anything like that. This is the sidebar. It scrolls out, so you know you have more space here. Mark trade ideas. So basically, you have all the chat rooms that you could like want ever. Then you have the homepage. This is where you have all of the lessons. You have all of the the Q&As. You also have these office hours. So you have office hours as well. If you need office hours for a lesson or whatever it is, they're recorded as well. So you could literally never go to class and just, go off the recordings. And this is for all you guys that maybe have a 9 to 5, or for some of you guys that maybe live, somewhere far away, you'll be able to have all of the recordings there. And so any questions about the trading school, right now is the time. Okay. Right now is the time to ask. Okay, so is attending course feasible for those that work full time? Yeah, Valencia, there's a lot of members that have a full time 9 to 5. It's pretty common. It's normal. A lot of people do that, to be honest. So having the recordings there available is very helpful because you can watch them at any time, and if you can rewind it and so forth, and take down your questions, make sure that you list your questions, and you can follow up on that as well, because we have a policy here, no trader left behind, and we do apply that to what we do here overall. Live games to the top, great information. Thanks a lot. I'm glad you guys enjoyed today's session. It was very fun, engaging. Adam from YouTube has a question. How long do the live classes last, like throughout the year? Yeah, they're throughout the year. They're rolling. They don't stop. It's not like, we're going to stop in 1 year from when we start and then just give replays to everybody. It's always going to be live because the education that we're doing, we apply it to the current market. So within the education that you'll be getting in these classes, you will have actionable trade ideas with full setups, full analysis because it's part of the education, and that's why we do it with the current market. Now, like for example, if we would have done this course, if anybody did a course on trading on 2020, or like in a tuition like school for trading, it wouldn't be as valid as it is today because the market's changed completely 100%. So everything that we're doing is updated to the current market, Adam. And the actual trading school, process is 1 year, but all the people that stay for the ongoing mentorship, for the ongoing education, because the upcoming market is not going to be like the prior one. So yeah, it's pretty much a full-on community of traders around the world. Some people trade options, some people trade stocks, crypto, forex. It doesn't matter. Ultimately, this is the foundation for retail traders. It's the foundation for anything that you're trading. It doesn't matter what it is, Adam. You're welcome, fake account. Giuseppe, yeah, it's for a year. So it's a 1 year subscription with Mark Putrino, with the trading school. And it also comes with Benzinga Pro. And I'm going to show you a couple things here in a minute. All right. Just got to plow through these questions here. All right. Back to the Zoom questions. Do you get immediate access to past lessons as well? Absolutely. Jennifer, all of you guys that joined today only, we'll be able to go over all of the prior lessons that we have available, like from when we started. And I think it's about September, end of September, beginning of October, around there. But all the classes are there for you to review. All of the Q&As, all of Mark's past trade ideas, everything that we showed you, like the trades on, I'm not sure if it was Carnival Cruise Lines, and then Twilio, all of these trades are there in the chat for you to see. You could have taken any of these trades at any point and banked on them, either with a call or buying the stock, whatever fits your style. But we're giving you constant trade ideas with solid analysis on technicals, which is ultimately what is driving, the markets, right? We definitely look for important levels, important momentum, important trends. We look at a lot of things and we try to just give it to you all in one like package so that you don't have to be trying to do this all on your own. So yes, and you also get immediate access to Benzinga Pro. So you get immediate access to everything once you join. When do the classes start again? Well, we just opened the enrollment today, Suzanne. So if you want to join in today, more than welcome to have you here, be part of the family, of course. Valencia, send Rodrigo, send me an email, okay? I have an email here that I'm going to post. Just make sure you send an email there with your question there. How long could it take for the 8 sessions if you're grinding through it? I mean, we're going through the sessions day by day. So, and there's obviously, since we're going over the current market, we have to apply the lesson. We have to apply the concept to the current market. And we don't know what the market, how the charts are going to look like 2 months from now. So we do it with the live market for that reason. So how long it could, I mean, it takes a full year, Christopher, but you're still allowed to retake the courses. It's not like once you take it, you're not allowed to take it again. Like most places, you're actually allowed to take them as many times as you want with full support every single time. So this is the definition of hand holding, like from the 0-yard line to the touchdown. Okay, we're taking you guys to the end zone, holding your hand, giving you everything that you need, all of the tools, answering your questions, going over the lessons, applying the education to your trades, giving you feedback on all that stuff. So it's a full community. And really until you experience it, you're missing out. Quite honestly, you are. Joe, send an email to newsletters@benzinga.com. Dennis, yes, I'm going to put the link again here one more time. I think I put it in there. It is the link. It does have the 70% off that expires at midnight. This does include Benzinga Pro, the laptop, the full tuition, full education, all semesters covered for the full year. So 1 year from when you sign up, and the classes are rolling. So we're not stopping. We keep doing live classes and so forth. Is this good for those that don't know stock lingo? I need basic beginner help. Yeah, Valencia, this is really the place for you. Absolutely. I mean, you've come to the right place, no doubt. We have people that are just starting, and look, I mean, when you start, that's when you need the education. It's not after you blow up your account. I mean, a lot of people join after they blow up their account because they tried doing it and they weren't able to do it successfully, and they're trying to get education now. So but don't do that. Don't wait until you're down 50, 80% on your account. I have those conversations quite often with retail traders. And, there comes a moment in time where you just have to, admit it that you need help, right? It's not everybody can figure it out on their own. That's nothing wrong with that, right? But if you can acknowledge that, if your P&L is telling you that, right? If your trades are not as good as you would want them to be, then maybe it's time to try to learn from a professional, right? No, we don't, Drew. You're welcome, Adam. You're welcome, Adam. Okay. How do you find stocks to read their charts? Benzinga Pro, Jamie, and I'm going to go over that in a few. And Benzinga Pro is included in the trading school, if you're asking. Wilbert, so we opened the enrollment today to the trading school, so you guys are able to join today. So we opened the enrollment basically starting today, right? So you guys can join, right? As new students. So you are able to join. Yes, we did open the enrollment period. The news is inside Benzinga Pro as well. And you can talk about it on the trading school. I mean, I'll show you how I use it. Abdul, platform, we're using Benzinga Pro. Okay. You're welcome, Essa. Yeah, it was a great presentation. Absolutely great. Mark did a great job. Yeah, Trevor. Yep, correct. Yeah, you're welcome, Mona. It comes with Benzinga Pro Essential, Wilfred. So the trading school has Benzinga Pro Essential. It doesn't have the basic. Each class. Okay, I'm gonna go over this with you guys. The class begins at 7 in the morning. Everything is Eastern time. Okay, 7 a.m. to 7:45 lecture. 7:45 to 9, you have the lecture review. This is not written in stone. Like if it needs to be extended, it's extended. It all depends on questions you guys have and participation. And then you have a break. You know, if you want to trade in between, you can do that. We have trading chat rooms and we have, education chat rooms inside the trading school where you can go and do that, right? In your, like a lounge chat room. So you can do that in between until we meet again at 12 noon. And that is when we do a full market overview, a full recap of the lesson. You have any questions, you have more than enough places to ask them and get a response. And if that's not enough, you still can get office hours with Mark. Office hours. And all that is recorded and uploaded to the portal so that if you didn't need, let's say you didn't want to get the office hours or you didn't want to attend the Q&As, they're still there for you. They're still there for you. So if you got a couple hours spare, it never hurts to educate yourself to become a better trader. I guarantee you're gonna learn at least 2-3 things on each lesson. There's just always someone else with another question that you didn't think about, that it just you just think like, wow, that's a good question. And I like the answer. That makes sense. So we all learn together as a community. That's part of the benefits. It's part of the benefits. Adam, the laptop, it's a new Google Chromebook. We will send it out after the 7-day money back guarantee period. All right. You're welcome, Siobhan. You're welcome. It was a great session today for sure. David, send me an email, okay? So that we can work this out for you. If you already have Benzinga Pro, send me an email and we'll work something out, because the trading school does come with Benzinga Pro. Valencia, do you recommend the dollar amount to have to start investing? No, I don't. I mean, it's up to your personal situation. Everybody has a different, financial situation. I'll drop the email there. Hold up. But I'll definitely tell you the best time to start investing is now. But no, actually, the best time to start investing is like a long time ago. So if you're asking yourself the question, is it the time to start investing? Well, I mean, you're not late, but you could have done a lot better if you would have started earlier. So the sooner, the better. This is what I'm trying to emphasize. This education is going to build on top of other education, and you're going to keep building on these blocks. And that way, you're going to become a better trader. You're going to start understanding not just the lingo that'll come. Don't worry about that. You need to actually understand like the concepts. Once you understand the concepts, you can break it down. Like at least that's how I break it down. You talk about the concepts that we're discussing in the trading school, and then from there you break it down. What does that concept entail? Okay. And then you break it down and you go granular on things. This is just a tip for like maybe getting a new concept, right? Obviously you guys are you guys are spoiled that you guys have an instructor who's a former hedge fund manager. You get Benzinga Pro, you get the chat rooms for trading, the education, the replays, the Q&As, the classes Monday to Friday. This is out of this world. Like when I started, there was nothing even close to this. It was wing it or wing it. It wasn't much out there. So you guys being able to have this available is awesome. You might not even know it because you just started trading and you're just figuring things out. But like I'm telling you, this is the best way to start trading. If you are interested in investing or swing trading or day trading or options or crypto, whatever it is, it's good that you came into the markets, but don't let the hype be the reason why you came into the markets. So come for the hype, but stay for the responsible trading and the responsible, trading in general. Okay. David, yeah, I put the email down there. All right, James. Yeah, I think I put the email down there. Did I? Is it there? Oh, yeah, it's there. Valencia, you're awesome too. I'm glad you enjoyed the session. It was very fun, engaging. I'm glad you guys participated. If you think you had fun today, wait till you get into the trading school. All right, David. Okay. And let's just make sure nobody here on YouTube has more questions. All right, Adam, you got your answer on the laptop. Steve, no worries, man. Sorry if you answered this. Yes, you can do that, Stevie. So once you enroll in the classes, you are able to take the classes again. That is correct. During the entire year. There's no limit on how many times you can take it. Unlike other places, you can take these classes as many times as you want, with an instructor, and we have office hours, full support. Nobody gets left behind. Like that's dead on with really what we're trying to do here. We want you guys to become smart, profitable traders. That's it. That's very nice of us. Yes. Yeah, James. It's Mark. Mark is the instructor, the former hedge fund manager who traded with Cohen and Jabeli and all these guys. That's the instructor, Mark. It's pretty awesome. That is your instructor. Like, I mean, this is what I'm saying. You guys don't, some of you guys don't know it, but like you are just getting spoiled. Like this is true spoiling to the max. This is max spoiling, but it's good because you guys are going to have a better advantage. I'm glad you guys are taking that leap and starting to trade and invest, but do it responsibly, do it with the right community and do it with the right tools, which is why you have Benzinga Pro. So I'm going to go over Pro really quick here. All right, you guys know the trading school. If anybody has questions on this platform, let me know in the Zoom chat, or the YouTube one. Yeah, you're welcome, David. You're welcome, Samsung Galaxy. Yeah, Samsung, send me an email, okay? Yeah, tell your coworkers, man. Like this is a lot of people do that. A lot of people come in with their friends, they come husband and wife, or two guys, two friends learning how to trade. It's normal. I mean, it's okay to trade, learn from a professional. There's nothing wrong with learning from a professional. There is something wrong trying to learn from Reddit. Like there is 1,000,000% things wrong there. Okay, so I put the email for you. So basically, this is the trading school. As you can see there, you have all the lessons. They're all labeled. You see office hours. Okay, momentum. All the classes are there. Q&A momentum, chart patterns. Siobhan, the laptop's going to be emailed. It's going to be sent 7 days after the date of sign up. So you sign up today, 7 days from today. We'll be sending that to you. These are the classes, guys: investment strategy and trading systems, market principles. These are from October 20th. Obviously, I'm going back in time. This is the live class. We don't have a live class right now, so obviously there's nothing here. But there's a chat here on the right side where you see that blank space, and it gets activated once the class begins. All right. Video library. You see where I click there in the bar, video library. This is where you have all of the recordings, everything. I know someone was asking, can I go look at the prior recordings? You can do that there. Everything, the Q&As. The investment psychology is by far my favorite class. So this is a sneak peek of one of the classes. All right, take a look. Investment styles. Remember, this is education coming from somebody a real money manager. This is done by somebody who's been in the game with the biggest. There's nobody better than Cohen or Jabeli. Those guys are like, you could posterize them. They're definitely at that level. So Mark Putrino having that experience there. You know, he's giving you all the insights. He's giving you all the educations. And you know, hedge funds, you know, they're really tight with the info and the education they give their hedge fund managers and traders. So being able to you guys get this already digested and filtered through Mark, it's a blessing. It's a blessing. I'm telling you, you guys are getting spoiled. I mean, full on research here, analysis of stocks. And this is the class strategies. So, you know, you're setting up your own strategies there. And I'm PayPal right there 4 months ago. I mean, we're already talking about PayPal here. Like, I mean, I randomly brought up this ticker. We're already talking about it. So this is obviously, you're only looking at the chart, but in the real, like in the live class, there's an actual chat on the side. And then you have the chat rooms, all right? You guys know the chat rooms. If you want to go straight to Pro, which Pro is included in the trading school, all you got to do is click on this button, Pro. It's going to take you there. I already have it open. And this is just a quick session that I'm going to do with you guys so that you can take a look at a couple of ways that we can use Pro, right? So once you get into the trading school, you get your trade ideas from Pro, and then you take them to the trading school. You go to the trading tab, you know, and you put in, you know, the ticker. Hey, PayPal, good for entry, you know, whatever it is. You have a full community of people ready to help you, you know, ready to join you in any questions that you have, basically. So if you feel that you need help, there are tons of great people there that are going to help you out there, not just Mark. It's a great community is what I'm saying. So this is the basic details tab. We have Apple here. We can put whatever. We can put Facebook, and doesn't matter. Meta platform. And in this details tab, basically, I mean, it's your normal chart, right? Price action, volume, really all I need. I want to throw an indicator there. It's the only one that I use, to be honest. From my conversation with money managers, it seems to be reliable. And it's pretty simple, basic to understand. So, all right, this is the indicator. This is the RSI right there. So these are all the settings. If you do want to edit the indicators, I want to change the color, and I want to make this easier to see for me. So I change it to the color white because it just, you know, it's easier to spot there in the charts. And then you can look easily, you can look at, you know, this bounce on the RSI right here. Yep, chart's going lower, but the RSI is giving you a different signal. I mean, you can use the RSI to make so many different types of trades, guys. But, you know, this is what we're doing in the trading school. So this is the chart, right? You can put your indicators there. You can draw lines if you need to. So all of your charting, all that, you can do it there in Pro. Yeah, Siobhan, we'll send it over. Jared, after my year is up, can I still access the classes? If you decide to stay with the community, then yes. It's only for active members, pretty much. So we have a lot of tools out there for you guys, not just in Pro, but in the trading school itself, a lot of upgrades that are coming. I can't tell you, you know, all of them, but I can tell you there's a lot coming. There's a lot coming. It's going to get better. It's only getting started. So if you continue to be a member of the trading school, Jared, you will continue to have access to Pro and the classes and the lesson and everything that we're doing there. So this is the basic deep chart, guys. Okay. I'm going to go here to overview. This is where I get an overview of the company itself. And you have all of the news, right? Remember, Benzinga is among many things, but financial media would be a good way to describe it. So we have all of the connections with the publishers, all the research companies, all of these companies that are basically publishing news on behalf of companies. And that's something that we do as well that I'll cover in a bit. But basically, you get all of the news. I've used different brokerages. I'm not going to name them, but many times I'm looking at a stock ripping and there's no news on it. And then I have to go to my Benzinga Pro. And then I see that in Pro, the news was there days ago. And then you'll also see articles that are hundreds of editors write. So it definitely, you're in the zone, you're in the game when you're using Pro, no doubt. Obviously, you have your financials here, your key ratios, company, industry, peers, another trade idea right there. You're surrounded by trade ideas, guys. Okay, I'm showing you right here, peers. You can just look at their competitors. Easy, easy money, guys. You have earnings information, balance sheet, ownership, shareholder equity. Like these two right below are very, very good because before when I started trading and I didn't use Pro, I had about probably 20, 30 tabs open and each one was to look at something different. And with Pro, I really just do everything like in one site and it saves me time. And at this point, you should already know that time is money. So that's what we're trying to do here. Save you time, make you money. And right here, you have a brief description of the company. This is great for day traders or swing traders if you just want to take a quick look at what the company does. If you see it in one of our scanners, our proprietary scanners that are the only ones that you can see news pre-market and aftermarket. We aggregate data during those sessions. Nobody else does. So that you can actually trade pre-market when everybody else is waiting till 9:30 for their scanners to turn on. And there's once it turns on, it's only aggregating the data from the prior regular day. So it's if you want to be a successful trader and you are starting to scan the markets at 9:30, even though they open at 4 in the morning, you need to step up your game. Point blank, you just do. You have to invest in the right tools. Period. That's just how it is. So yeah, if you're swing trading or day trading, you can look at the description of the company there. And below you have the link if you want to go to that company's website and get a little bit of a deeper dive. If you want to do research, this is the tool for you. Research for short-term trade ideas and for investments as well. I have two accounts. I trade options and I have a long-term account for long-term investments. And I use Pro for all of my research for everything, for a swing trade or for a short trade, and all of the tools are there. Dejana, okay, so if you get the deal today, basically you keep that discount for life. So next year, you're going to keep the 70% off. So you keep paying, the same, you'll have that discount for life, if that makes sense, every year. Paul is asking, do any of the classes cover momentum trading? Yeah, they do. We actually have a class named Momentum. And that's a strategy that I use for trading options. I trade momentum and I use the charts to my advantage. So it's a mix of everything. I use a mix of fundamentals. I use a mix of news, I guess, or market themes, and then a combination of technicals with price patterns. But all of this stuff comes together once if you take the trading school for a year, this will come naturally to you. It's going to be like, it all comes in one, it's all going to come in one piece when you're looking to take a trade. And it's not going to be, right away, but that's why you have all the courses and the classes so that you can kind of align yourself. It's like when you go to school to become a doctor, right? You're taking all the classes because all the classes are going to be beneficial to you being a successful doctor. It's the same thing for trading. You're taking all the classes because they're all going to help you become a more successful trader. So every class has a great point, a great lesson to it. You're welcome. Yeah. All right. So this is the details tab. This is the insiders tool that we just put out. So shout out to all the coders and developers that work on this. So you see here, and I put a chart there on the side. You can actually have different tools inside the same workstation. So here you can see multiple insider buys. So this tells you that there are multiple directors, multiple people in that company that are buying stock. So this means that the CEO is buying stock, the CFO, the chief marketing officer, the VP of sales, the director of this, the director of that, the manager of that. So basically, when you have a lot of people in the company buying the stock at once, I mean, that's a huge, like bullish sentiment for me. When I see everybody in the stock going long, like every director, everybody going long, that is pretty bullish to me. So this is a great place where you can get trade ideas. And I actually do this. I'm giving you guys some of my setups. Like these are some of the setups that I trade. These are tools that you can change to whatever you want to trade, but this is just an example of how I use it, and maybe how either you want to use it or you can customize it, whatnot. But this is just a general feeling. So yes, you have a lot of people buying there, and you're like, okay, so we gather all this data. We have all these SEC filings, and it's a bunch of paperwork. And what we do is that we summarize that through our technology here, basically give you the top of the top. So we scan through all of the SEC filings, find the ones where we see multiple directors, multiple VPs, and chair positions buying the stock, and then we accumulate that data and bring it to you here in that chart by order of size. This is very helpful, guys. These are like trade ideas, like spoon fed to you. If you don't, I mean, this is hand holding to the max. So that's one type of chart you have there. That's the first one. The second one below is insider purchases. It's, when you see a big purchase from one individual, the one from above is multiple individuals. And it gives you the percentage that they own, the quantity they're buying, the price. This gives you the same thing, who's buying in the company, but only for penny stocks. A lot of you guys love penny stocks, including myself, including Mark. We all love those low float, small cap stocks for trades. So there you go. You have a good reason right there. But obviously, you need to look a little bit further into that. So you can see they own 4.16% after that quantity purchase. So some pretty good data. And then you have the opposite, insider sales above 100 grand. If you're looking for good trade ideas, this would be a good trade idea on the short side. People that are selling over 100 grand. I mean, obviously, this doesn't mean you got to go short it. This means that this could be a good place to start to find trade ideas. Okay. It's all about doing your research and going through the motions, doing the right analysis. But where do you start? This would be a good place to start. So this is one tool. I'm just giving you one tool. If that's not enough, there's a lot more. So yeah, yes, Martha's hand holding to the max. Like, this is true hand holding. We're never going to let go. The course Tuesday is for a year. Obviously, it's rolling. We don't finish. We don't stop. But the actual subscription is for a year, if that makes sense. All right. How do you get? All right, let's go to some questions here. Yeah, you get alert. Well, we have the trading room, which has only Mark's trade ideas. So yeah, that's where all of his trade ideas are. It's not like if you don't get it that right second, it's not valid. Like, as you can see, we were talking about Twilio, FedEx, Carnival Cruise Lines, so many other stocks. And we have tons of stocks that we go over during every lesson. Like, the education is on actual stocks. This is not education like reading a textbook. We're going through the lessons, applying it to the current market, to the current stocks in the market. So you will get trade ideas, like it or not, via education. Now, if you want to take action on them, that's another approach as well. Doesn't, you can still do that. So yes, Jennifer, Mark's trade recommendations are included with the trading school. That's what you're getting and more. Joe, try it, man. Try it. You really have nothing to lose. You get all your money back. I mean, what more do you want? Really, there's not a lot of places that do money back guarantee, Joe. So, try it 7 days. If you don't like it, get all your money back. Give it a try. You have to give yourself a chance. You have to give yourself a chance. Why? Because institutions spend millions and millions of dollars in research and data. And if you are not equipping yourself with Benzinga Pro or trading with the right community, you are already at a disadvantage, like if you would not already be at a disadvantage as a retail trader. So disadvantage over disadvantage over disadvantage, and then you wonder why the trades don't work. It comes a point where you have to realize and face the facts that, okay, if you want to be successful in trading, there are some tools that you need so that you're not trading with all of the information that everybody else has. Because if you're trading what everybody else is trading, what's your edge? You don't have an edge. And you need one in this market. You need to have multiple edges. And Pro gives you multiple edges. So you need to be able to have data that, I mean, that not everybody else would have, or just packaged differently, where you can view it and analyze it and find patterns and all that. So Pro will give you the option to do that. If you want to customize all these things, you can do that. So I would definitely try it, Joe. New topic discussed daily or in depth for a week. Suzanne, what's up, Suzanne? So we have 8 chapters. Monday to Thursday, you go over 1 chapter each. Friday, you have a recap. Now, by in depth, we go in depth in every chapter, and because we're going over lessons. So, there's not willy nilly, like, just read this slide. We're going over lessons. We're going over actual, like, lessons for trading, and we apply that lesson as we are showing it to you guys with the current charts. Okay. So yes, that's your answer right there. And as you can see, the calendar, if you want to use the calendar for, yep, you got it, Suzanne. So I have my conference calls here on my calendar, and you can either change it by analyst ratings, dividends, earnings, economics, FDA calendar, guidance, IPOs, M&As, real estate, SEC filings. So this is the calendar. This is another tool that you can use to find trade ideas. So if you already have Pro, you just want to keep your Pro, this is good for you. But if you want to, join the community and learn how to trade with Mark and all that and get Pro, you can join as well. And if you want Pro and want to join the trading school, we can also help you get in. So this is the basic chart. I already showed you guys this. This is the scanner. This is the only scanner open pre-market and aftermarket. I'm just going to go over this really quick with you guys. You have the gainers there. Okay. You can select gainers and losers, or just gainers or losers. You click gainers, you select pre-market, you click session, select the sectors that you want to trade. I want to do communication services and consumer staples. And then I want to limit the market cap of what I'm trading. Max 2 bill market cap. And then something that's under 10 bucks. All right. So you're going to have all these trade ideas that you're going to be trading in the pre-market session before anybody else even has their scanners open. So you can customize this more if you want. Then we have the signals tab. You have price signals. It shows spikes in price. Then you have the unusual options activity there. That's not included in the trading school, but I'm just showing it to you. Block trades. This is where we cover dark pool trades. If you do want to check that, it gives you all the big orders, like multi-million-dollar orders. So you can filter all of this by your watch list, just like everything else I showed you. Halts, you can also look at all the stocks that are being halted on the way up or down. Opening gaps, so stocks that are gapping up in the morning. And then you have highs and lows, and you can filter this by 52-week highs or 52-week lows. You can put session high or day high. I mean, you can filter this to day trade or to go long. You can filter it as however you want, with whatever strategy that you want. And then lastly, I want to show you here Benzinga exclusives. So this is the news that we break. There are companies that come to Benzinga because they want to reach you, the retail trader. They want to get their message sent out as clear as possible on what they're trying to do as a company to inform their shareholders. So they come to Benzinga, and then we release the news. We break the news. Okay. We're the source of the news. And you can see here, all of these are Benzinga exclusives. And when we release the news, if you have Benzinga Pro, you get it immediately. If you have another brokerage, it's very likely it could take longer, just because of the transfer of data and all that. But as a Pro member, you get it right away. And I'm just going to show you a couple of stocks that we did exclusives with really quick. Let's go to my main tab here. Okay, this is one that we did, Alfie. I don't know if you know Alfie. Yeah, options, unusual options activity is not included. Yep. So Alfie PR came out around $3 or something like that, like in this range. The stock went all the way up to $21, $22. If this is not good enough for you, I don't know what is. Okay. That's when we release the news, when Benzinga breaks the news. Let me show you another one. I know you guys know these tickers. BBIG. If you don't remember the stock, I do. We had a PR with them literally like when it was a dollar or two. and it went all the way up to 12. That's not good enough for you. There's another one that I like, AEHR, PR, right there. $2, $3, shoots all the way up to 27, 28. I'm still holding. This is the power of data. It's the power of Benzinga Pro. Okay. Now I want you to join the trading school, get these trade ideas, and then bring them back to the trading school chat room right here. Okay. I showed you how I did a quick little, research there to find some stocks. Really, didn't take me more than 5 to 10 minutes or something like that. So you can come back here with your friends, with your other, students, and you can go over the trades and all that stuff. And if you have questions, you can ask Mark. You can go over Mark's trade ideas here. He's talking about Netflix, and then you can go back to Pro and basically do your research there and see your progress if you've improved or not. So I think this has been a very fruitful lesson, guys. I hope you enjoyed the presentation from Mark. I wanted to go over Pro and just give you a couple tips and tricks that I use to find trade ideas and then bring them back to the trading school. And if you guys have questions, feel free to email. We're going to drop an email in the chat. You can call or email there. The deal expires at midnight. And if you have questions, feel free to reach out, guys. So you're welcome, Jeff. You're welcome, guys. Thanks for being here on a Sunday. It's a pretty productive Sunday, if you ask me. So I had fun. Thanks for being here with us. And we'll be seeing you guys next time. So thanks a lot for joining in. We're going to be closing the stream here in a bit. So thanks, guys, for being here. I appreciate you. Appreciate your time. Appreciate the effort you put into educating yourself, becoming a better trader. So we'll see you guys on the next time. All right. Thanks for being in here and enjoy your weekend. Get ready for Monday. Okay. Appreciate it too. All right, guys.